Also for the support of the Embassy of Sweden, also long-running partner in these ventures and many more of those, and the supporters, members supporting the conference, Intrum and ERI. Also, very gladly to share that we had an ambition to start an initiative on running our events of reduced carbon footprint, and this is first trial, I must say. And you will shortly notice that the food served in the conference will be all local, vegetarian, and seasonal. We also chosen not to issue any bottled water, and the milk you're using for your coffee, as you might have noticed, is dairy-free and produced by vegetables or nuts. In addition, to offset what we have unavoidably generated by organizing activities, our partner club here has helped us to estimate that more or less approximately 3 tons of CO2 footprint has been generated unavoidably. But we're planning to compensate this by planting some trees. And one of our members, Green Gold, forest investment company, will help us to plant some trees the next spring that will hopefully, by growing, will compensate of some of the things that we have done today. And in the future, we really will continue aiming for this initiative, and our events and activities will be really in consideration to be more sustainable and reducing the carbon footprint. So with that, I would really like to welcome you to this year's event. Hope you will enjoy and find it insightful. And a special welcome goes to our attendees connecting virtually. They will not have these opportunities of being present here, but we do hope they will also find some insights to enjoy. And we do hope that we will see this and even more expanded audience next year when hosting the 9th European Banking and Finance Conference. And now I finish my thank you and welcome, and I would like to give a podium to Carlo Laxo on behalf of the Embassy of Sweden to say a few remarks.
Minister of Finance, Mr. Vilius Šapoka, the chairperson of the Swedish Chamber of Commerce, Ms. Lina, ladies and gentlemen, good morning. I'm very happy, as Lina mentioned as well, to see so many people. It feels a bit strange when you've been in lockdown and without meeting physically for so long time. Thank you for coming here, and welcome to the 8th Banking and Finance Conference. As in the past, this conference is dedicated to the most relevant developments in the sectors of European business, banking and financial services. This year's topic, as you have seen, is banking in the global playground. I believe this conference is very timely, as we will discuss current global tendencies in the financial and banking sectors, but against a backdrop of the corona pandemic. Our societies have been shaken to the core by the pandemic. It has affected all people and businesses, including the entire banking system. What will be the new normal, or is it possible to go back to the old normal? These are questions people, politicians, and all businesses must ask themselves, as well as how do we change our strategies and policies or prepare ourselves for the new normal. When looking at the program, I think that we will have some good food for thought from the coming speakers. Around the world, powerful measures have been implemented to mitigate the effects on the real economy and reduce turbulence on financial markets. We've also seen, both in Sweden and elsewhere, that financial organizations have attempted to show adaptability and flexibility by operating to protect the health of their customers as well as employees, whilst ensuring that banking services remain consistent and fully available to their customers. It seems that the pandemic has provided the financial and banking sector with an opportunity to step up its green digital agenda, both on a global and local levels. The corona pandemic has also shown how quickly and unexpectedly the economic situation can change, and how important it is for the financial system to have good resilience to shocks. Therefore, I believe that banking in the global playground, like never before, needs to embrace green innovations and technological advancement in order to maintain this market sustainable, competitive, and more resilient. As I said earlier, I hope this conference will provide you with a range of interesting insights, and also take this opportunity to thank the Swedish Chamber of Commerce for organizing this great event, as well as wish you fruitful discussions and an enjoyable networking throughout the day. Stay safe and remember the social distancing. Thank you.
Thank you very much. Is it working? Yeah, it does. Mr. Minister, ladies and gentlemen, very warm welcome also on behalf of co-organizers TGS Baltic. Thank you very much for coming. We thought that every year we think this conference is a challenge, and it is a challenge to come up with the relevant topics, to invite interesting speakers, to coordinate the agendas, to be able to organize this, and we thought these were the challenges until this year, when we understood that there's a huge challenge to come together. So thank you very much for overcoming the challenge, for coming together. It is great to see you here. We very much appreciate your braveness. I don't think there are many indoor events like this nowadays. So thank you for being here. Life is full of surprises, and this year especially. 2020 has been full of surprises, and when I say this, probably most of us think, yes, those surprises were not pleasant, and indeed there were surprises that were not pleasant with the virus and the accompanying consequences and economic consequences and the necessary restrictions and so on. On the other hand, we all saw nice surprises. Surprisingly, things happened that you wouldn't believe they would happen. And the way, at least in our experience of the teams that have worked despite the distancing, the things that have been managed by people despite the distancing, the creativity that resulted from the various restrictions, it was amazing. And I think also organizing this conference and looking at the program now, I think this is one of these surprises. This is one of this is how this wonderful team of Swedish Chamber of Commerce, principally the team of Swedish Chamber of Commerce and the Swedish Embassy, and everybody involved in organizing achieved a really nice result in terms of this. The program that we have. So I do invite you to enjoy a lot, and I do invite you to look for more pleasant surprises here, in a sense that I'm looking forward to hearing the ideas that are going to come during the speeches, from the speeches. Now, a couple of organizational things. I think there should be a slide now that will show you some questions we would invite you to answer. Can we please put the slide up? Yes, if you could please scan this barcode, I will do the same. This is the CNO surveys, and you will see in the survey, you will see 3 questions. And if you could please answer them immediately. For now, there'll be some, while you're answering, I'll explain that there will be some, or rather we're trying to make it a lot of interactivity during the conference. So we do invite you to send your questions through another platform. We'll come to that. And we would like to begin with these initial questions. So here are the initial questions, 4 of them actually. And can you, in the platform that if you were successful in opening, everybody was successful in, you just tap the right answer or the answer you think is right and push next. So this will give us some kind of initial framework for the discussion. Because these are the questions that, what is the most burning matter on your agenda? When do you expect your sector will get back to pre-COVID levels, if you think this possibility exists? How, in your opinion, are banks managing the challenges compared to the previous crisis? And today I'm mostly looking forward to, and there are some options to answer. So one more minute for answers, and I think then we will see for all of us the results. It's interesting how these technologies have flourished during the COVID crisis, and how everybody is now we were speaking at coffee that now it's even so boring, all these things that were exciting. Okay, so the most burning matter, seizing new opportunities. Amazing. I think, like sometimes when we do this kind of gatherings, and we of course attend this kind of gatherings also in other countries, and sometimes I think we are missing this opportunity to be proud. I mean, I think only in Lithuania and in the other Baltics you will see this kind of answer. I mean, the optimism and how hungry we are to develop, to achieve more is amazing. I mean, this is the energy that's feeding Europe, I think. So great. Thank you very much. Okay, getting back. Of course, since we are all optimistic here, so getting back next year. Or back already is so if we're not back already, we're getting back next year. How are banks managing? Better, different situation. Okay, that's a nice spread. So something to think about, something to discuss during the various discussions today. Okay, so here, number 1 is learning about the recent banking trends, connecting with people, of course, enjoying live conference experience, and learning about the recent FinTech trends. Thank you very much. Yeah, this was number 4, yeah? So thank you for answering. So now, please, do we have the Slido connection for questions? Yes, so now please log into another platform. Since we are now so conversant with all kinds of platforms, this is going to be very easy. We should have another QR code, I think. It's coming. So in Slido, please do raise the questions. You saw in the program, we have a number of excellent speeches, which I will introduce one by one when they come. But also we have 2 panel discussions. And in those 2 panel discussions, we will be, so here it is. The conference code is 80920. So let's all log into Slido. And please ask your questions. If you would like, you could direct those questions to specific speakers who will be on the panel. And we will try to take some of those questions during the panel. Unfortunately, in the past experience, there are many questions, so I won't be able to answer, or I will not answer any questions, I believe, but I won't be able to ask the panelists all the questions that you will raise, but I will try to make it as, to select the most topical ones, or those that are repeated the most. And so this way, of course, we will have an opportunity. We'll have a disinfected microphone, so you can also ask a question live. So we'll have that also, but these panel discussions are going to be short, so let's save time. Okay, so without further ado, I'm very, very happy to invite Mr. Vilius Šapoka, the Minister of Finance of the Republic of Lithuania. Thank you very much, Minister, once again for coming. I know this is really tough time, and the government is tackling tough issues. And your finding time to address us is really very, very much appreciated. Please, the floor is yours.
So, good morning, everyone. It's indeed a great pleasure and honor to be here. And of course, as Ambassador has mentioned, that it's a bit strange, but in any case, it's a great pleasure to welcome you at the 8th European Banking and Finance Conference and address you in person. So, of course, it's a very important time for a country and for all countries, how we tackle with the challenges we face right now. Even though there has been an uptick of in new infections after summer holiday, I believe that our safety and preventive measures will be sufficient, I'm sure. We are going to control that situation. There are no doubts about that. Of course, during the lockdown, there were a lot of things which happened, and a lot of uncertainty, not only about pandemic situation, but also how we are going to survive in terms of our economy. So, but here I have quite good news. If we look to the figures of the second quarter, so Lithuania's drop down was one of the lowest in the whole EU. If we look deeper and we take into account the results from the first quarter, so Lithuania's GDP went down just around 1%. So basically, I'm pretty sure that we're going to avoid even technical recession. So, and it might happen that this year we will have positive GDP result. So, but of course, provided that pandemic situation is more or less at the level we have now, and I do believe that it's important to avoid the exponential growth of new cases. So, of course, when we talk about recovery phase, it's not only important to survive, but as it was said by you and voted by you, that we should seize the new opportunities which are evolving. And what the government is doing, just recently, in July, the government adopted a plan in order to exploit the current situation, current new geopolitical and national trade waves, I would say. And our purpose is to invest in the most effective way in the shortest period of time. And I call this plan future DNA of our economy. So if we invest now in the most effective way, then we can transform our economy in a far shorter period of time. So what are the main goals of this plan, the aim of the plan is, as I said, rapidly and effectively invest in the recovery and growth of the Lithuanian economy in order to transform it into sustainable, innovative, and high value-added economy. There are 5 priorities. Of course, number 1 priority is investments into our human capital, investments into digital economy and business, innovation and research, future economic infrastructure, and of course, last but not least, investments into green energy, and of course, investments associated with climate change. So in total, we have allocated and dedicated 3.3 billion euros. It's foreseen for this long-term investment. Regarding the long-term impact of the plan's investments, we expect that €1 invested will bring a return around of €2 and generate around 12 billion euros in nominal GDP. So the plan is being implemented in a very fast way, and everybody is invited to take new proposals for the plan. And I would like to say a few words about FinTech. I'm a big fan of it, and so just to review what has happened in a period of a few years and what's going to happen next. So the growth rates during the last 4 years have been indeed very impressive. The number of electronic money institutions and payments grew by more than 150%. The value of transactions has grown more than 6 times, and the income has tripled. Regarding investment in tech startups, we can see that it has increased more than 30 times with steady growth of foreign investors. These inspiring results give us motivation to move forward, and let me name just a few initiatives and examples. So Ministry of Finance is working on the new version of National FinTech Action Plan, aimed at further reducing unnecessary barriers and ensuring proper risk management. Vilius is preparing Startup Honeymoon initiative that will be aimed at helping startups based in Vilnius to start their journey. Payments Council is working on the development of Lithuania's payments market. They have recently provided recommendations for open banking and cashless payments in schools. And finally, Ministry of Finance, Bank of Lithuania, and commercial banks are continuously working on ensuring proper risk management. We are already at the final stage of establishing anti-money laundering competence center. This is good news. And on this positive note, I'm going to stop. And I would like to wish you a successful, productive conference. And of course, please stay safe. Thank you.
Thank you very much. Thank you very much, Minister. Thank you for, again, optimistic speech and optimistic outlook. And the best thing is it's realistic, not only optimistic. So now we move to the keynote speaker. Well, and we'll have a number of speakers like this. I'll tell you some stories about trying to get here. And not all of them were successful. Morten Hansen is the head of economics department in the Stockholm School of Economics in Riga and vice chairman of the Latvian Fiscal Discipline Council. And he's been following the economies in the Baltics for 25 years. And he will provide the macroeconomic review by Zoom TV. Because as we all have heard, there were various news about ability of people from Lithuania to come into Latvia without having to quarantine. And Morten has just finished quarantining after his trip to Denmark, and he said he couldn't afford to quarantine for 2 more weeks. Sorry, after coming back. Of course, on Friday there were good news, but those news were too late to change the plans. So we will have Morten on the screen, and I'm sure that the content of the speech will not be any way less. Do we have a connection?
Yes.
Okay, we have one more minute for the connection. That's the time for me to tell a joke, and I don't know one, and I'm bad at telling jokes. So, but we've had really wonderful response from speakers from abroad, and you see that the program is really ambitious, and really thank you very much once again for my colleagues who were organizing this. And the speakers from abroad were really, and I will tell you, some of them did a really amazing effort to try to overcome COVID restrictions and come here and be able to speak live. Here we go. Here we go. So, I don't know, Mr. Hansen, do you hear us?
I certainly do, yes. And I hope you hear me.
Okay. Now... Here we go. So, I don't know, Mr. Hansen, do you hear us?
I certainly do, yes.
Okay.
You hear me?
Okay. Now, yeah. Now, we've had 2 minutes of the lag, and I know it happens because some of these, I think they go to the US and back.
So, should I start my presentation? Okay, I assume that everybody can hear me by now, and thank you for the introduction. Thank you for inviting me to be there, even though, well, I am not there, as was explained. And allow me to start by a little bit thinking about Mr. Larsson and his comments early on when he said that he was really happy to be there. He was happy to see an audience, and I was sitting here in Riga thinking, I wish it was me also, right? Anyway, I was invited to come here to give a short presentation, a keynote speech. So I have some slides that I would like to share with you. So give me these here just 15, 20 seconds to try to share my screen and put up my slides, and hopefully it's going to work out. Otherwise, Justina will send me messages in the chat box. So just a moment. Here we are, share, presentation, share. Getting it on, and then it should be there. So I have a bunch of slides, some 25 or so, but don't worry about that. It's going to go faster than you think. It's not very deep, I think, what I have, but I hope that there will be some points of view that might be of relevance and might be of interest. See, as an economist, this is sort of my job, right? It's my job to look into the crystal ball and then try to come up with predictions about the future. That's roughly speaking what the job is for many of us economists. Problem is that these days looking into the crystal ball is a little bit tricky. because of all of this here corona pandemic. Usually we economists, we have some background information, we can sort of see how the economy is moving, but what has been going on the past half year has of course been rather different. Anyway, we can still come up with some conclusions and so on, and that's what I will try to do. But allow me to sort of move on here, right? I'd sometimes like to use this slide, especially, I must say, this year, old quote from Donald Rumsfeld, who used to be defense minister in the United States. It's about the known knowns, but especially the third part, of course, about the unknown unknowns. And that's, I would say, very much where we are right now. 1 year ago, I had no idea that there was something called coronavirus, and neither did anyone else. And nobody had an idea of what it would do to the economies, right? Definitely an unknown unknown, and therefore also a little bit harder to speak about what's it gonna do to the economies that we have. The way in which I will go forward will be in the following way, a little bit strange perhaps, comparing with the financial crisis, even though these two things they have not so much in common, but they have something in common. So there's something to learn from the financial crisis, even though it was very different. And when I, in red there, try to say I will try to fit it into the panel discussion, I don't know if I will, because I'm not quite sure what the panel discussion will revolve around. And also the presentation by Swedbank doesn't mean that I'm not interested in the other presentations. I very much am, but I'm just not so much an expert on that. I'm more into the parts there that are a little bit more related to macro. And then, as it says in the third part, I'll put a positive spin on the outlook. I shouldn't have used the term positive spin, because that means that I'm not being honest, but I'm trying really to be honest here. And I think it's the outlook for Lithuania as well as for Latvia and Estonia is actually comparatively good, right? It's not perfect. We would all have liked to live without this pandemic, but given that it's there, we are in sort of comparatively good shape, at least is going to be my point of view. So here a little bit comparison with the financial crisis. When we came into that, all three Baltics, we had serious imbalances in our economies, overheated labor markets, massive current account deficits, huge credit booms, huge real estate booms, and so on. And you could say, as I write there, we were very much in the eye of the storm. Right? If some countries really could be hit by the financial crisis, it was us, because we were these overheated economies that really could suffer from a stop of credits. Now in this, as some call it, the great lockdown, almost all over the economy, before it started, we were sort of balanced. There was a lack of imbalances, a little bit labor markets again, perhaps, but I think also economic policy has been quite prudent leading up to this year crisis, which means, or should mean, that we can exit from it also in reasonably good shape. So for me, it's a very different starting point that we have here in 2020 compared to what we had in 2007, 2008. And just going into it, right, this is how I would have presented our economies in the Baltics just a half a year ago. You know, bright sunshine with a few clouds, right? A little bit overheating in the labor markets, but otherwise only problems being there of a long-term nature in terms of demographics, of migration issues, and what have you. But otherwise, quite frankly, looking quite good. Then suddenly, poof, back in March, everything started happening, right? There's no reason for me to read all those bullets, right? You are more familiar with them, I would say, right? We are in a health crisis, yeah, we have seen an oil price crisis, etc., etc., etc. Right? And it all came super fast. I think things happened fast during the financial crisis, but they happened even faster this time around. Then again, and here perhaps my positive spin starts, and you can see I changed the weather forecast here to not perfect weather, of course, but not such a bad thunderstorm either. But in this area, right, stock markets are not so relevant. Oil price crisis, well, oil price is going down. It's not a crisis for us, rather it's the other way around. And we're neither in a currency crisis nor in a debt crisis. And that's where I would like to continue. So this year, it looks a little bit like, you know, the glass being half full, right? Yes, we see labor market issues, health crisis, obviously, but many of these issues that are hitting other countries, they're not so much an issue for us. We should be happy about that. Allow me to look here at first at a little bit at the labor market. It's not very much, right? Here we have the unemployment rates from the 3 Baltic countries. And as we're familiar with, after the financial crisis, these here were dropping and been dropping very significantly. And if I look at it just from a Lithuanian perspective, it's not so smart, perhaps with my PowerPoint, but what I'm hinting at here is that unemployment had come down to such low levels as were comparable with about the summer of 2008, right? The lowest unemployment rates for 12 years, meaning, again, a tightening of the labor market, a little bit overheating again of the labor markets, and therefore, should this pandemic happen, which of course it did, then I should say, sounds a little bit tough, but it happened at the right time. Think about this here, right? What if this pandemic had come in 2009 or 2010 and had added to 14, 15, 16% unemployment that already was the case at that time? Would have been absolute disaster. In that sense, relatively speaking, this year happens at the right time, even though it sounds somewhat strange to say so. And in terms of policy, I also think that we have seen very different results. Back in the financial crisis, I would say monetary policy was to a large extent uncoordinated. Lithuania and Lithuania, Latvia and Estonia, none of them were in the Eurozone at the time. Fiscal policy was very slow in those days, and very quickly we came into these austerity measures, which I would say exacerbated the problems at the time, but also coming from that fiscal policy had been way too lax leading up to the crisis. Right now, we certainly have seen that monetary policy has responded very, very fast, already back in March, April. And this time around, we're all 3 of us in the Eurozone, and I will argue that that has been a very big advantage for us. Fiscal policy, also very fast response there by the individual governments that we have, but also this time from the European Union. So very big differences here in terms of the background for the financial crisis, the background for the Great Lockdown, but also very big differences, I would say, in terms of treating this in terms of monetary and fiscal policy in these 2 cases. I would put it like this and say this time around, we're protected by the euro. There has been zero talk about currency risk in our area, but we have, of course, seen that in many other countries, and in some countries they will have a very, very serious currency crisis. Perhaps I'm overstating this point at the moment coming here from Latvia, right? But certainly during the financial crisis, a lot of the talk in Latvia was about the sustainability of the fixed exchange rate at the time. Right now, nobody thinks about currencies. I really think that this is another good reason for being inside the Eurozone, strongly protected by a credible currency. And in terms of fiscal policy here, I allow myself to use a graph of government debt as some sort of indicator of, but how much maneuver room do we have for fiscal policy? And that's where all 3 Baltics also stand out very well. Debt levels are very low as a share of GDP. They will rise, and they will rise significantly this year, but it still comes from low to not so big. Other countries to the right in my graph there, especially from Southern Europe, much bigger trouble, already highly indebted, and they will be much more so. So again, should this year happen, then we could say we are well prepared here in the Baltics. And just to sort of drive that point in, I would like to deal with the following graph. If you're familiar with these Maastricht criteria of budget balance, then the budget deficit shouldn't be more than 3%, so you shouldn't be to the left on the first axis of the minus 3%. And total government debt should not be above 60%, so on the second axis, you shouldn't be above 60, meaning you should sort of try with your economic policy, sort of the simplest version of this Growth and Stability Pact of the EU, you should try to be basically inside the red box. And allow me just a couple of graphs to show the difference that we see in the EU in this year context. This is Lithuania. And no, yeah, forget about 1998, that the box was not invented at that time. But during the financial crisis, 2009, 10, 11, Lithuania was kicked out of the box quite significantly, very large budget deficits that also raised government debt. But then from 2012, 2013, fiscal policy has been very, very prudent and very much adhering to these rules inside the EU. Lithuania has been inside the box. It's even been running budget surpluses in the past few years, and thereby has also managed to lower its debt. In other words, what's going to happen this year, of course, is Lithuania will again be kicked out of the box. Debt will increase, but it all comes from a very small level. So it's manageable, it's sustainable. Lithuania did its homework, as did Latvians and Estonians. And just for comparison, I have this here picture. This is Italy, 2009, also hit by the financial crisis, then managed to reduce budget deficits and so on. And oh yeah, by the way, I forgot to put in the box, right? And that is sitting there. And what I just get from this here picture is that we have two countries, Lithuania, Italy, hugely different, like day and night when it comes to fiscal policy and also the possibility of using fiscal policy in the future. Lithuania coming from a much stronger background than the Italians. We get this here, this is not so polite, this here slide, but I take my chances, right? That we see this north-south divide in the EU being exacerbated, being strengthened. That's very unfortunate, but we have very big different backgrounds, certainly in terms of our fiscal policies. Then I have this one. I'm not so happy. I'm not sure I'm so happy with this year graph. It's of the economic growth decline this year, estimated IMF. I sometimes think about myself that, hey, let's stop using GDP figures this year. Let's wait until 21 or 22 when we will have an overview of what exactly did happen. Because I agree with the minister, whom I think said it very succinctly, that there are already changes coming on now. I'm quite sure that GDP will decline this year, but then again, there will be these corrections already starting here in the third and fourth quarter. That should mean that the total decline is not so big. Otherwise, I would use it to say, but wait a minute, we in the Baltics, we have already tried this year before. We had it during the financial crisis. This year decline is huge, but we had something that was even bigger in those days. We're a little bit used to this here. Okay, what next? Just very briefly from me, right? And that is that interest rates will remain low. I think many of the bankers in the room can tell me much more about that. But as far as I can see, this is going to continue on and on and on for years, keeping ultra low interest rates there. Again, the ECB reacted super fast, and I'm dead certain that they will stay on this year course. And there's going to be tons and tons of spending and borrowing this year also from the EU, this new next generation recovery plan. So we have a lot of fiscal stimulus coming to the economies to try to counter the effects of what has happened there in terms of the pandemic. Not so much to be said about that from my side. I think we have all heard about it a lot, right? Some people are then worried about, with all this money being pumped into the economy, will this not be inflationary? Well, not yet, definitely. And I have, certainly I hope that I can have strong belief in and credibility in the European Central Bank that it'll stick to its inflation target, right? Right now, they're supposed to pump money into the economy to raise inflation closer to this very specific target of theirs of close to but below 2% in the medium term. And they're far from that still. I hope and believe that they will stick to this also, so that we will not see any high inflation coming out of this. But when interest rates can be raised, not anytime soon, I think. I've been a little bit kind, I think, to Lithuania. Then I should also be a little bit hard in the end. I'm coming very close to my last points of view here. In terms of this stimulus coming from the EU and this next generation and so on plan, recovery plan. We know that there will be a lot of borrowing taking place. We know there will be transfers. The borrowing will be taking place mutualized. It'll take advantage of the high ratings that we have in many countries in Northern Europe. And here I'm a little bit sad about that. I think Lithuania, Latvia, and Estonia haven't really voiced a very strong opinion. They are parts of this here rather loose Hanseatic League that is fiscally very conservative and so on. But I think they should have voiced a little bit more opposition to this here plan. Are we really in favor of that countries in the EU should borrow in a sort of mutual way? Are we really in favor of that transfers should be directed, in this case, towards the southern countries? Perhaps it should, but it's certainly opening new doors. And I don't think it was discussed enough here in our countries, where we seem to have a point of view that said, hey, as long as we get more money than we have to pay, let's just say yes. I'm lacking some principles there, quite frankly. Last conclusions from my side, very simple, I would say. I've mentioned the first bullet already many times. This country was well prepared for such a crisis. It's very unfortunate that it's there, but should it come, it came at the right time. Private sector, I haven't talked about that, gets a lot of, or has gotten a lot of attention and support, has to be short-lived, right? We have to look at sustainability of public finances, but we also have to have companies out there again, standing on their own feet. I don't see any migration issues coming up this time as there was after the financial crisis. All countries are in more or less same kind of trouble. Therefore, there's really nowhere to move in order to find other jobs. And then I have this one with young people. We saw the financial crisis in many countries really hit, especially the young, especially in Southern Europe, very, very high unemployment rates for them. That's not happening here. Younger people are better off in that context. They're better educated. So we're not going to have this confrontation between younger and older. And then is something we should be really, really happy about, right? When I look to the world with these super low interest rates, I will see another financial crisis coming. There must be a lot of firms, a lot of financial firms that are looking for some sort of return somewhere. And when some people start buying bonds from Iraq, then I'm definitely getting concerned. And the very last one, will this V-shaped recovery take place? I'm still waiting for full signs. Yes, there will be growth next year. I have no doubt about that, but I'm waiting to see how impressive it will be. But I'm hoping that others will be able to perhaps say something about that as we move along. Then I move out of my presentation. I've been on PowerPoint for the whole time, so I'm not quite sure what has otherwise been going on. I tried to be short here. I was not very deep perhaps, but I hope there was a few points that might be of relevance. Thank you for this, and I stop sharing. Thank you.
Thank you very much. Now next speaker will be here live, although, you know, like looking at the future, you never know if we are real or just holograms walking around. So, but you can see still with video being a little bit slow, you can rely that real people are coming. So next person is really, really welcome, Ms. Jekaterina Govina. She is Executive Director of Supervision of Service at the Bank of Lithuania, and Jekaterina has been the new face of the Bank of Lithuania, and the face that's been driving this fintech breakthrough that we were having. And she has been recognized globally by Lattice 80 as one of the top 100 women in fintech. So wonderful to have you here, Jekaterina, and welcome to the floor on de-risking as a response to enhanced ML supervisory measures And what do we do about that? Please.
Hello, everyone. It's a pleasure to be here. Thank you for invitation. I'm not going to speak about fintech right now. Contrary, I will be speaking about risk management. And I want to actually go far from economy, because I will be speaking about a topic that is really relevant for the small economy, especially open economy, which wants trade happen, which wants economy function, which wants foreign direct investments coming to Lithuania. So I will be speaking about what constitutes a pipeline of the economy. It's payments and it is access to bank account. The risking. Yes, I don't know whether everyone is familiar with the subject, with the term, the risking, so I provided a definition here. The risking refers to the phenomena of banks, usually banks, either restricting or terminating relationships with their clients, because clients are seen as of higher risk for bank or other financial institution. And the topic is actually appears to be relevant, and those of you who follows newspapers, the last week our Minister of Economy stated that Lithuania actually loses competition to Estonia, Poland, while attracting Belarusian companies to Lithuania, and one of the major reasons is because banks don't want to open a bank account to Belarusian companies. Yes, it was a really bold statement, which appears not to be true, but politics is not about facts usually. In fact, our data shows that banks in Lithuania has opened about 30,000 accounts, payment accounts for Belarusian citizens, and more than 1,000 payment accounts for Belarusian origin companies. So the situation is not so bad as politics want it to be, probably. So the risking, but still the risking is really relevant nowadays, and I think that it will be relevant in the future. And here are some of the reasons why actually the risking is risky. Yes, is bad for our country. So first of all, the major reason is when financial institutions don't want to have a relationship with clients, it forces a client to look for some other alternatives. And a good example of other alternatives is cryptocurrencies. Yes, when people can get access to bank account, they try to find the solution which will help them to continue its economic activity. The other reason, it harms financial inclusion. It is not actually the case here in Lithuania, because banks have quite good access to data. They can check the person, but in some countries it is the case, it is the problem. It limits economic activity, and I already told about that, that companies which want to trade with their partners all around the globe, with Africa, Australia, and etc., if they don't have access to bank account, if they don't have access to foreign currency, the result is that they just cannot have this relationship, economic relationship. And the last point, which I told already, it prevents foreign direct investments to the country. Because if a company comes to Lithuania, it wants to establish the company, it wants to start the activity as soon as possible, and if it does not get access to necessary infrastructure, to pay employees, to pay office rent, etc., so it means that it just will choose probably the country which will provide the whole infrastructure to it. Yes, and here is the quote of Financial Action Task Force, which actually said that the risking should never be an excuse for a bank to avoid implementing a risk-based approach, which means that banks cannot hide behind the risking as the reason for not to manage risk, because a bank is about managing risk, not about avoidance of the risks. And here are some drivers behind the risking. Of course, banks are afraid of potential sanctions. And I here represent the institution which applies these sanctions, and I very well understand that banks do not want to misbehave, so they rather choose not to have some relationship at all than to risk to be fined. And the second driver behind the risking is reputational risk. Some banks just don't want to have a relationship with some clients segment, not because they are risky, but just because of some, for example, moral standards. Adults websites, some banks don't want to be related to them. So these are according to Manual, the two major drivers why banks prefer not to have a relationship with some clients. And I promised with the title of my presentation to speak about sanctions and the risking, and whether there is any correlation between these two topics. So here you see actually the graph which shows sanctions that the Bank of Lithuania applied because of some infringements of AML regulation. So this line shows that the number of fines and the total amount of fines is growing. And here are some relevant cases which affects our banking industry as well. So three huge banks that either received or is waiting to receive a fine from regulators. So Danske case, very well informed. So I just took the title from some newspaper that Danske faces $2 billion dollars in fines, but the case is not closed, so it's ongoing, so we don't know what will end up actually with a fine. Swedbank case, about $500 million in a fine from Swedish Finansinspektion, financial regulator, and SEB, about €100 million fine again from Swedish Finansinspektion. So yes, it definitely is a huge motivator for banks to be cautious, and it should be. Yeah. Going a bit further, here you see statistics that we have. Unfortunately, we have statistics only for the year 2018 and 2019 about the closure of banks' bank account due to money laundering reasons. So you see that the number of closures actually dropped in the year 2019. But the reason is not probably because banks just stopped the risking, but the major reason here is that banks just closed accounts of the clients that were just not active. Yes, and the process took time in exactly 2018, if I remember well. But still, we see some numbers that banks either don't open a bank account, so the first graph is about not opening bank account, or the second graph shows about terminating bank accounts for the clients due to money laundering reasons. And here is the statistics about banks not opening bank account or closing bank accounts for FinTechs. And by FinTechs, I mean payment institutions and electronic money institutions. So you see, it's in a 2 year, we already received about 150 so-called reject forms from banks. It means that banks decided not to continue or not to open a bank account for electronic money and payment institution. And as a result, it affected 73 companies. So the number is quite impressive. And the major reasons you can see on the right. So the major reason actually behind this decision is, as banks state, is correspondent bank's requirement. So correspondent bank just ask our banks not to continue a relationship with a client which causes excessive risk. But still, the conclusion of these numbers would be that we do not have actually hard evidence of massive de-risking in Lithuania because of sanctions. But it doesn't mean that it is not happening. So our takeaway from that numbers is that we need to continue to investigate, and we are planning next year to make a more comprehensive analysis on that, just to look more into the details and understand what are actually the reasons of bank accounts closures or not opening. Yeah, and my last slide, still a way to move forward, how we as a country could ensure that we stay competitive, especially taking in account our really small financial market. Still, it is really small. Nevertheless, we have quite a big amount of electronic money and payment institutions. Some of them are just not oriented towards providing this basic payment account, like for trade and for other activities. So first of all, and Minister already mentioned that we are in the final stages of establishing AML Competence Center. So it's like a first of a kind collaboration between public sector authorities and private sector. So hopefully it will ensure the better exchange of information between FIU, between Bank of Lithuania and banks. Because sometimes we have some pieces of information that does not help us to have a clear picture of what is really happening in our payment sector. The second possible solution is common market solutions, and a good example is happening in Latvia and Estonia. It's a pity it is not happening here in Lithuania. So shared KYC, know your customer solutions are being developed. So market could have the initiative on some common IT solutions that would enable banks and other financial institutions to collect necessary data and to exchange necessary data about clients. Third point, and I think our Minister of Economy will work on that. It is abolishment of the requirement that is currently set in the companies law to open a bank account specifically in the bank. So we should rethink maybe the concept and allow companies to open a bank account in electronic money institutions, probably. The fourth solution would be, of course, and I take it for myself, more guidance from Bank of Lithuania, from FIU, our finansinių nusikaltimų tyrimo tarnyba probably is needed for banks to feel comfortable that they understand risks as they should understand. And the last point, which is happening on EU level, it is development of more harmonized EU level regulation and supervision. So the banks or any other of financial institutions understand what regulators are expecting from them, no matter where they are, either in Sweden or in Italy. Yeah, I put 3 dots in the end, and it is my invitation probably to dialogue, and I think this topic will stay relevant, and it will be even more relevant in the future. So any other ideas or suggestions would be welcomed from the industry, and I understand that it is not for us to expect from industry to solve the issue. It is like working together. I know that I was very speedy, but I needed to come with time, and time is up right now. So thank you for your attention, and yeah, thank you.
Thank you. Thank you very much. Thank you very much, Jekaterina, and thank you very much for a very interesting presentation, and thank you for keeping with the time. We are getting a little bit behind, but the speeches are very interesting, so we hope we get some time back. Now, next, we will have an online presentation. We were very much hoping that this would be live, and I would like to thank very much Federica for doing everything humanly possible to be here. That included taking a COVID test on Saturday. For that, I think she needed to travel 4 hours one way to the testing site. And the test was negative. And she was on the way to the airport even. And I believe she was almost here. But then, well, unfortunately, not all of our institutions here in Lithuania work as well as the Bank of Lithuania and the Ministry of Finance. And we couldn't complete the Lithuanian part of the process. But anyway, thank you very much, Federica, for being with us online. I believe we will see Federica very soon. Federica Taccogna is a partner at the financial services practice of FTI Consulting in London. She is also a strategic advisor of the Malta Financial Services Authority and Malta Financial Intelligence Analysis Unit. And Federica will continue on AML-related topics, and she will present to us AML and FinTechs, Disrupting the Disruptors. Do we have the connection?
Hello?
So, you see how much better it is to be live. Based on experience, I'm trying to keep silence so that you don't have to listen twice to what I say. Well, anyway, I think one note, I saw questions coming in Slido, and thank you very much for being active. One note on the questions, we will have on the panel only those speakers who are here live. so unfortunately not the speakers who are on video. Okay, Federica, are you here?
Am I live? Very good.
Yes, I think we can start. So, Federica, the floor is yours. Please welcome to our conference.
Thank you very much. Thank you very much, everyone. Thank you for inviting me. Thank you for helping me attempt to get there. I have evidence of my test here, which I took, and I was very much looking forward to being there. Things happened. I will be there soon, next time at some point. It has always been a pleasure to be in Vilnius, and I look forward to being there again. We are short of time, so I will skip over the niceties, and I will get down to the topic of what I wanted to discuss today. As we mentioned earlier, I'm here to talk about financial crime, and I'm here to talk in particular about what financial crime does or is likely to do to the fintech world. Before I start, I thought I should introduce myself and what I do. The short version of what I do is that I fight criminals and I fly planes. Both things are true, but perhaps I should give a little bit more context. I run a practice that does two things. On one hand, it works with the banks, with the financial institutions, helping the financial institutions build their systems and their controls to protect themselves from financial crime. On the other hand, I do something that is quite unique. I work with regulators and enforcement agencies, with people like the FBI, the DOJ, but also the various financial intelligence units in Europe, investigating financial crime. I have, amongst other things, investigated the Swedbank related case, various Latvian and Lithuanian cases, Vatican corruption, and I spend a lot of my time in Malta, investigating and looking after the concerns of which you are possibly already aware. Wherever there are large cases of corruption and money laundering, by and large, my team is there or thereabouts. The reason why I say these things is that because what this has given me has been the opportunity to look at what actually makes financial crime happen. There are, financial crime, money laundering, terrorist financing makes headlines. We keep hearing about the biggest scandals, the laundromats. We hear that there has been 4 billion, 5 billion worth of money that's passed through the system. Financial crime is a huge problem in today's society. However, what really means something is that it is very small things that enable this type of financial crime to happen. Very small oversights. And what I wanted to do today, in particular, I wanted to talk about how, for FinTechs in particular, not just for the big banks, those small things can create a huge risk. But also perhaps as to how there is an opportunity for FinTechs to utilize their smaller size, their leaner outfits to their advantage. So let me tell you, whenever I speak to individuals, to firms that operate in the FinTech world, I hear a lot of, "Oh God, but we are so small. We are nothing compared to a Barclays, compared to a Swedbank, compared to a Danske. Are we really going to be used and abused as a vehicle of for financial crime?" And the reality is that Yes, you are. Let me explain for a moment how financial crime simply happens. Let's imagine, this is an oversimplification, but we have a jurisdiction, we have a place in the world where dirty money is made. This is made by way of corruption, mostly. I know that if you look at the statistics online, they tell you that one of the biggest drivers of money laundering and financial crime in the world is tax evasion. It's not true. In my experience, the biggest driver of financial crime today is corruption. It is just that we are, as a world, we are not ready to recognize corruption as a driver of financial crime. In any case, we have a jurisdiction in which financial crime, illicit money is made. Let's call it Azerbaijan. I apologize if there is anyone in this room, virtual and live, from Azerbaijan. There's no real. There's no particular driver for that. There is a lot of Azerbaijani dirty money in the system right now. Let's call this country country A, where dirty money has been made. If I have made 4 or 5 million in dirty money, I need to spend it somewhere. I don't want to spend it all in Azerbaijan. There are very limited amount of things I can do and buy in Azerbaijan with that money. I need to take it out somewhere else. Mostly in jurisdictions like the UK, London, property, luxury goods, cars, watches, art. These are all the things and therefore the places where the money comes out. However, if I go with that bag of money to a bank, to a main bank, that bank in London will typically ask me a lot of questions. Where I've made this money, how I've made it, why I'm making so much money, and things like that. Those are the typical KYC questions. So I need somewhere to take money from the country where I've made it to the country where I want to use it. And as I said, I can go through the big banks. I can go through the mainstream of financial services, and I will go. But what is happening is that the mainstream financial services is becoming more and more probing, is asking more and more questions. So as a criminal, I need to start looking for other channels where perhaps I'm asked fewer questions. I'll take you to the other one in a moment. That channel where fewer questions are asked tends to be, right now, the world of FinTechs. And that is not because FinTechs are stupid or willingly trying to help criminals, but simply because FinTechs are typically smaller outfits, generally startups with fewer people who obviously say, I have literally just started up. How can I buy so many compliance people and put in place these types of controls that are really expensive? And I understand that argument. What happens, though, is that criminals also know that that is the case, and they actively exploit the network of FinTechs. And that is where I take you to this picture. This is a real picture from an investigation that we have conducted recently. That this investigation is something that was primarily centered around FinTechs. All the connections that you see there is something. It's a touch point with a FinTech around the world. These are all small payment institutions that were being used to send criminal money around the world. So this tells us that in reality, there is a parallel universe of a shadow banking system that criminals have always used. This shadow banking economy has existed forever, but now with the world of FinTechs, we are enabling it. we are enabling yet another layer of this parallel world. And I'm here to say let's not go there. Absolutely, let's go there, because technology, innovation, moving towards the future is important. But let's do so in a controlled manner. And it is possible to mitigate the risk. How, you will ask me? With due diligence, which means much more than obtaining a copy of a passport, with strong transaction monitoring, and with skills and knowledge, because there is no system anyone will ever buy that will prevent any bad thing from happening. You need intelligent people, experienced people who can actually look through the system. You need a framework of controls, but also we must remember that being capable of doing this does not necessarily mean a bad thing. It means also an opportunity for FinTechs to become and to go into a space where banks cannot perhaps get immediately. Bigger banks have a bigger legacy to have to adjust and to have to transform. I could be here talking for the rest of the day on this topic, because it's what I do and it's what I'm passionate about. But I'm being told regularly that my time is up. The thing I wanted to say, however, is that I often hear that we shouldn't worry so much about financial crime, because financial crime is actually without victims. And it's not true. One thing I mention very often is the fact that when I was a child, I'm originally from Sicily, although I've lived in the UK for the biggest part of my life, the largest part of my life. When I was a child in Sicily, my house was burnt down by the mafia. And I know for a fact that financial crime, it's not a victimless crime. And therefore, everyone who plays in the financial services ecosystem has a responsibility and a duty to prevent it, and the ability to do so. On that beautiful note, I leave you, and I'm here for any questions. Thank you.
Thank you. Thank you very much, Federica. Thank you for presenting, and of course it's an important aspect to bear in mind. You know, like sometimes the AML and KYC requirements, they are seen as a kind of burden, you know, and burden is bad by definition, and it's actually a safeguard. The next speaker, and we are behind the time, so we try to speed up. The next speaker is Anders Larsson, Head of Corporate Banking in SEB. Anders has a broad banking experience in working for SEB for more than 25 years. And with Anders, we will move to a sustainable banking topic. And Anders will tell us how sustainable banking works in this new normal situation. Anders, the floor is yours.
Thank you very much. I hope that you all hear me well and can see the presentation. If not, I guess I will get notified. So, sustainability for banks, what does it mean? Is that the threat or an opportunity? This is what this presentation is about. I think that the big theme for the 2020s, it will be the effects of global warming. We have heard these stories for decades now about the ice melting at the North Pole and the winters getting warmer. But have we really acted on that? Not until now, I would say, because now we have the effects coming much, much closer to us. We have the big bushfires in Australia. We have the fires in California, Portugal. And just 2 years ago, we had some big wildfires in the forest in Sweden as well. I think this has made us all think, and this has made us all also realize that it is a big transition that is happening, and we are all a part of that transition. The big question now is that not if it will happen, a big transition, if sustainability will be important, but how quick will it go? If you take the climate as an aspect of sustainability and look into that one, we have the researchers that they produce the IPCC report. According to the research people that really are into this area, they say that we are almost already too late. we need to move quicker than what we are doing. It should have happened yesterday. When looking on the big corporates in the world, we can see that this is a theme that have come very quickly now. And the major CEOs of the major companies, they are really into this area when it comes to sustainability, and not least when it comes to climate change. We also see that this is happening very much for private individuals. My neighbor that used to have 2 very fancy sport cars, well, this summer he sold them. He bought a new Porsche Taycan electric car instead, and then he installed solar panels. And by the way, I have solar panels away, but another electric car. So I think this is happening very much on individual level. However, there are other parts of this as well, because this transition, that is tough, because transition is a change, and changing behavior, that is tricky for us human beings. When you listen to the voters, it's many voters that see this not as an opportunity, but as a threat. And this was one of the reasons, I would guess, that Mr. Trump, when he got elected as president of the United States, he made this statement that we need to burn more coal. This country needs to burn more coal and get back to real energy. And of course, that never happened, because we know that that is not financially a viable way to move forward. But it was very popular in some areas for getting votes. So what will then happen? What are the other forces then? I would say we have a young generation coming, a young generation that is not tied down by the legacy of things, a young generation that is very strong in values. And for this young fellow you see in this picture, this is probably not his dream vehicle going forward. I would say this is his dream vehicle, an electric bike, which you now see a lot of in Stockholm, or maybe an electric car if he affords that one. So it's a big transition going on. So I think for companies, it's a risk for any company in any industry to say that sustainability, it's not really touching me, it's something maybe happening down the road. I think we should plan for that. It will come regulatory changes quite quick in this area. As an example, on Iceland, there is a law that a gender pay gap is illegal. It's illegal to pay different salary to females versus males if they're doing the same work. So they are starting a trend in this area, and we will see other laws coming. Things that were not allowed, that were allowed 30 years ago, are not allowed today. I think this will change in the future. So if we then move into banking, what will the effects be for banking of this? And what does it need to be successful as a bank in this area? Let's start with regulations, because bank is a super regulated business. It's not the direct effects of what we are doing in banks that are the important. It's the indirect effect. What companies are we financing? What type of payment flows is it that we allow to go through our system? What type of counterparties are we working with, as we've heard before here? And this is what the regulators see as well, that we can drive a change by having the bank do very much of this work. So regulations are coming. The European Union is forward-leaning when it comes to climate change. The European Union has instated the taxonomy, which tells what is okay now, but also putting a timeline, what is okay and what is not okay for a number of industries when it comes to climate effects going forward. The other point for banks that is important is to do an assessment of credit risk of the companies. Who will be the winners and who will be the losers when it comes to this transition? Take the truck industry. Is it Scania and Volvo that will continue to be winners in this industry? Or is it Nikola, the new company that has been started in the US that is listed, that will produce trucks based upon hydrogen? They hope to be the Tesla when it comes to trucks. Traveling industry. Well, we all know the problems about traveling currently, but there was a trend already before that in some countries, not least in Sweden, that it was actually less popular of traveling for leisure due to the CO2 effects of your traveling to Thailand, as an example. It speaks for itself that financing ski slopes will be a challenging business when it comes to climate warming. But this is kind of negative scenarios. We have a number of positive things happening, and and opportunities as well for companies. That also tells where bank can do. Elon Musk had a vision to go electric for cars. I think that we can see that his vision is really coming through with all electrical cars coming. And by the way, they are very fun to drive. So I would never go back to an old type of car. This is a company, this is a Norwegian company. It was founded back in 1972. They are now the global leader when it comes to recycling machines, so bottles, cans, and so on. The first order from this company, the first big order, come from the Swedish liquor store, the state-owned ones, Systembolaget, in 1974. So why did this company become the global leader? When it comes to bottles and cans, it should be a US company with that huge market. It was because Scandinavia was very early in when it comes to putting up incentives for people to do recycling. So this also creates business opportunities that you can actually go global with. Another visionary company is Hybrid. This is a startup. It's founded by 3 large Swedish companies that cooperate with this one. And this is to make steel with 0 CO2 impact. You can see the top figures of this. It's a huge difference here. So they have now produced a pilot plant up in Luleå that is up and running since some weeks. And they are now looking to make an investment in a new steel plant up in northern Sweden, because that's where we will have a lot of area to put up windmills. And this investment will be a 2 billion euro investment for the next phase of this project. So this is huge opportunities. They realize that compared to the current cost of producing, this is probably 30% more expensive to produce steel in this way. But they also bet on that the prices for carbon emissions will continue to rise. So this eventually will be actually a cheaper way to produce steel as well, and not only more CO2 friendly. Granul Invest, an Estonian company, is one of the leading companies in Europe when it comes to producing wood pellet. The key usage of wood pellets is in power plants, and this is previously coal-fired power plants that are quite easily to convert into renewables by instead burning pellet. So this gives a lot of opportunities. And the whole utility sector gives a lot of investment opportunities and also financing needs for banks and for the bond market. As it is now, according to some research, it says that 60% of all coal-fired plants in the world actually should be closed down because it's cheaper to make the investment in renewables and produce electricity in that way instead. The third thing for a bank to be successful when it comes to sustainability, that is to have sustainable products and grasp the opportunities when the world is in a transition. This is an example of the green bond market that was invented less than 10 years ago. And last year it was raised $250 billion in green bonds and other sustainable bonds. The interesting thing is actually on this slide, that is that SEB, that I must be humble and say is not one of the biggest banks in the world, but we are actually number 5 in global league table when it comes to green bonds. And the reason for that was that we invented this market because it was some Swedish pension institutions that wanted to have green investments, and then we had the connection with issuers that could issue these type of bonds. So we invented the market in an open framework that also other banks later on obviously could use, and that was the whole purpose of it. So this tells that it's global opportunities when you're early in the sustainable area. Other products we are having as well is, as example, microfinancing funds supporting especially the ladies in the third world to develop their business. And we have green mortgages, green loans, and so on. The fourth pillar for a bank to be successful, that is to support the countries. One of the backbones of the growth of a country is to support their entrepreneurs and giving them the means and the education to develop their businesses. That's a good thing to develop the countries. Another thing that we heard the Minister of Finance pointing out, as I recall his first point in the slide of all the activities happening in Lithuania, was research and development. We as a bank, we have the majority owners, the Wallenberg Foundations. The Wallenberg Foundations, they are every year putting money that they receive from their company, their shareholdings, back to society in terms of R&D for universities, schools, and other science facilities. And we are talking about several €100 million every single year. And this is not something new for the foundations. They started to do this 1917, more than 100 years ago. And this is a big support for Sweden to moving from one of the poorest countries in Europe to where we are today. This story makes me quite sad. I must say that I really love Lithuania, and that's why this story makes me sad. Because in the neighborhood where I live, and in quite many other neighborhoods as well, some 5-10 years ago, people started to avoid to buy BMWs. And the reason for that was the export from Sweden of steering wheels. And this was not stolen steering wheels. And actually the Swedish police went out and said that it was a very organized crime behind this. It was gangs from Poland and Lithuania exporting these wheels and then reinstating them in old crashed cars that they were then put back into the market again. And this, of course, this type of branding makes me very sad. So what can then we as a bank do? And this goes back to what we heard in the, I think, 2 previous presentations. That is, of course, to trace the money. So it must be traceable payments. And this is a key reason why we as a bank are very interested to move away from cash, because cash is very tricky to trace. And then we also heard the risks with the cryptocurrencies, and we know what type of business is supported by cryptocurrencies. So that is something to be really mindful about when you're in the finance sector and working with payments. So to conclude, when it comes to being successful as a bank in this, we have the regulatory requirements that will come. So it's better to be early on those things. We need to assess the clients who are the winners, who are the losers. This will give business opportunities, and there are even more business opportunities supporting the transition in society. And then it's about to have sustainable products to provide to the clients and the society. So specifically what we are doing in the Baltics is that we are doing an assessment of all our corporate clients. It's a number of questions, but the overriding areas are when it comes to the governance of the company, it's come to social issues, not least the well-being of the employees. It's about tax payments, because we know that if we should build a society, we all also need to pay tax to support that society. And then we have the environmental area. And the environmental area, that is expanding a lot now, because it's coming new regulations. So we as a bank, we need to assess what is the CO2 implication of the companies that we are financing. We can see down the road after this mapping has been done that most likely it will also come capital charges, meaning that banks will have to charge more for CO2 unfriendly businesses. This is an example how it works for the car industry that I think we all can relate to. This shows the CO2 emissions for passengers' cars. As it is now in European Union, the average is 120 grams CO2 per kilometer. According to the taxonomy, to be a green okay car, for now and for 5 years, it's okay actually to emit 50 grams. But after that, it should be 0. Only hydrogen or electrical cars will then be approved with the technologies we know today. So with this type of framework, you can then plot in different car manufacturers. What are their plans? How will they take down their emissions, tailpipe emissions from their cars? And thereby we can also see what are the companies that are in a risk of actually going out of the business, and what are the companies that will be successful in the future. So I would say that for banks, it's no point to stick the head in the sand. The change will happen. It's better to act earlier, because then you can take this as an opportunity, can view this as an opportunity. And we have 2 big game changers in society and for the banks, and it's sustainability, and then it's the digitalization. And I think that we have many other good speakers when it comes to digitalization. Thank you very much.
Thank you very, very much, Lars. And this is, of course, a topic we cannot ignore, and I mean, we don't have to all think the same, but we have to bear those things in mind and think about how our institution contributes, definitely. And how do we react? How do we again, there's lots of freedom of opinion and freedom of discussion, and we know politicians create a lot of interesting discussions there. But the sustainability as a topic and as a policy in the EU is out there. So if we try to ignore it, it's going to be hard to succeed. So thank you very much, Lars, Anders, I'm sorry, for taking us through those several of those questions. Now, next speaker is Lina Rollby Claesson. I'm sorry if I'm mispronouncing. Is a chief compliance officer of Intrum. It's headquartered in Stockholm. She has been also involved in lobbying efforts in Brussels regarding various EU proposals in the ongoing revision of the Consumer Credit Directive. Lina will talk to us about developing secondary markets for NPLs in the shattered legal landscape. Lina, please, the floor is yours.
Thank you very much. Good morning, Vilius, and good morning, participants of the European Banking and Finance Conference. Happy to be with you, despite the fact that I only have to be here digitally. So my name is Lina, and I'm going to be your guide through a shattered legal landscape for credit service managers, and that is for debt collection companies. I only have 10 minutes for this, so bear with me and let's kick off. So first, a little bit of an introduction to Intrum, where I work. Intrum is a company having 100 years of experience dealing with credit servicing. We are the market-leading company in Europe, and we are present in 24 different markets. Worldwide, we work with a complementary network of 160 business partners around the world. But what is really key for us is to help companies prosper by caring for their customers, meaning that we need to ensure both that the bills get paid, but also we need, most of all, to support consumers to get out over indebtedness situations. So how are we regulated? Back to where I started, a very scattered landscape. Basically, we have two different types of licenses. The first one is an ordinary debt collection license, and that's quite common throughout the European companies. We need that to carry out debt collection, and it's a lot oriented towards consumer protection. The second type is actually what we need for being able to purchase credit portfolios. But what is significant for both licenses is that the authorities supervising them could be anything from national central banks to financial supervisory authorities, a local police station, or a data protection authority. So very different. But what I think is important to mention here is that debt collection is different from banking in the way that we do not grant the original credits and we are not allowed to take on any bank deposits. So that's the reason why we are not subject to capital requirements such as CRR or CID that you would recognize in a bank. Data protection, yes, we process a lot of personal data. So that is, of course, very important. And since May 25th, 2018, we have been mapping, analyzing the impact for the industry, for our clients, for staff, but most of all in relation to our customers. And we started already in 2016, once we knew about the GDPR requirements. And as you can see on this slide, there are a lot of areas that we have covered. So it's very important for us that everyone feels comfortable with the way we are processing the data. But back to the very scattered landscape. I would like to point out, first of all, some of the conclusions we've made in this area. So first of all, debt collection is separately regulated from other businesses. We have our own legal ground to rely upon with an own purpose. but we also decide upon the means for processing the data. So normally what happens is that we load the data into our own independent debt collection systems, and we start the processing. And for this reason, we consider that it does actually make sense that we should take full control of the data as data controllers, being able to take on the full responsibility to ensure the security of the data we process. This and many other specifics for the debt collection business, such as using scoring techniques, is actually documented in one of the first, I believe, which will be the first code of conduct for personal data processing, which is currently subject to review by the European Data Protection Authority. So we as an industry, we have worked together with our pan-European branch organization, FinTechs, to produce this. So we're kind of pioneers in this area, I would say. Another area, really important, is about treating customers fairly. So when I joined Intrum some 5.5 years ago, I was told that it's not possible to create a group common policy on how to deal with the customers because the local national debt collection laws are so different throughout Europe. But since then, I have gathered several times the local compliance officers in our countries, and we have worked hard to set the minimum requirements together. And the overall result was actually approved last year from our board of directors and is now being implemented throughout all Intrum countries. So I'm proud of this work that we have done. And overall, the areas that we cover in this, I believe now 15 pages policy, is around confidentiality, about never putting any undue pressure towards the debtors, having special care and attention to vulnerable categories of debtors, and I will come back to this, and always ensure that there is a legitimate claim behind the demand. Cost, fees, interest levels, of course, to be reasonable and proportionate to the claim that we are processing. But also very important is to learn from mistakes. So we have introduced in all of our countries proper complaints procedures, and the reason for this is, of course, that we always can improve. So a very highly related area is around COVID-19. For everyone, I mean, we had also to adopt to a very new situation, which led to the fact that we adopted new guidelines of how to treat customers in these times. And we all agreed that these categories of customers should be treated as vulnerable. We have also applied quite a broad scope, so we include hospitalized customers or unemployed, or also customers taking care of their close relatives. So what do we offer in these situations? We offer to frozen the payment plans up to 6 months, and then we have a second review of those. We also promote, of course, digital channels to avoid having physical meetings. But on top of this, we have bi-weekly checked in all our countries where we operate the specific regulations being imposed for our business due to COVID-19. So quite a lot of restrictions, but we see actually a positive trend now that the impact is rather declining than increasing. And of course, very important, we pay attention to any kind of instructions coming from our commercial clients in this area. Anti-money laundering, yes, I too will touch a little bit about anti-money laundering because it is also for us a very important topic, and also the dealing with trade sanctions. So first of all, can credit servicing companies actually be exposed to money laundering? Yes. On this slide, you can see a few situations listed, and these are based on real cases. These also include identification of dealing with sanctioned either commercial clients, but also debtors. So I think it's fair to say that when the procedures are being tightened in banks, but also hopefully in payment institutions, there will be other ways to look for money laundering, also in relation to our industry. So it is important for us to set minimum requirements also in this area. So that's why we have created group common function how to deal with this. The huge challenge, again, is back to the shattered legal landscape that we have throughout Europe. So what you see on this slide are the European countries which have imposed some kind of anti-money laundering laws in relation to debt collection. So we have chosen to put them into different categories. So either it can be laws that are applicable to the debt collection service in itself, or it could only be applicable when we purchase credit portfolios, or in some cases, it's only applicable when we are servicing bank portfolios. I think what is important to state here is also that we have still a few countries where anti-money laundering laws are not applicable at all for debt collection business. But we have seen only during the past 5 years quite a fast development. So we foresee a development, and we are also having a dialogue with the European Commission around this. The main message here is that in the credit servicing industry, there are always three parties involved. So it's the commercial client and the credit servicing company, where we have the contractual relationship, and there is also the consumers, of course. So how to apply these requirements, for instance, KYC? I would say that in the vast majority of cases, KYC is applied towards the commercial clients because that's where we have the contractual relationship. But we do have exceptions from this rule as well. The key solution to this is, of course, to apply a risk-based approach. Because quite often, for instance, when we purchase credit portfolios, most of the consumers will remain dormant, as we say. So it doesn't make sense actually to apply proper KYC to all of these. Again, the risk-based approach is key here. Finally, some words around the interaction we have in Brussels with different working groups of the European Commission, but also with representatives of the Council and of the Parliament. We are involved in quite a few initiatives here. I think the one that is most important for us is the upcoming non-performing loan directive, which will create opportunities to have license requirements for credit management services, but also for credit portfolio purchasers. Main message here is that we consider the directive to be applicable for the whole credit servicing business, not only for servicing bank portfolios, but because that's more aligned with the current license structure that we have today. In conjunction with this, there are also other initiatives, such as putting up pan-European non-performing loan platforms and also creating asset management companies. These could be either privately financed or government supported. We are also part of the upcoming revision of the Consumer Credit Directive. The reason for this is that some countries, our local entities, need to be licensed as consumer credit providers. Last but not least, the upcoming action plan in relation to anti-money laundering. We have quite a lot of input in this area as well. So that was all for me. Thank you very much for having me.
Lina, thank you very much. Well, you can tell a good speech when the slides didn't come up and it's still interesting to listen. So thank you, Lina. Great job, and apologies for the technical glitch. I don't know why we couldn't see the slides. You noticed they were in a small square, but not on the main screen. And anyway, now the next speaker will be on the stage. So great news, and thank you for making it. We will have Vytenis Šimkus, senior economist at Swedbank. And Vytenis will tell us about 50 Shades of V and why countries suffered unevenly in the face of the pandemic. That's a very intriguing name for the presentation.
Change of pace. So yeah, Morten has covered nicely one half of a job of an economist, looking into the crystal ball and trying to see the future. I'll now won't try to look into the future too much. I'll try to look at the other half of the job of an economist, trying after the fact to look for the reasons why something happened. Because as you can see, from this chart, probably the name of the title suddenly became clear. I don't have 50 countries here with different shapes of the recovery. I have only 10, but I think 10 will be enough to illustrate how wildly different the performance of different countries has been in only the past half a year. And from the Q3 onwards, I have projections by myself and my colleagues at the bank what we currently expect the recovery to look like. And I, in this presentation, want to look at the reasons why this performance has been so wildly different, because as you imagine, the economic shock has been very similar across the countries. A pandemic has hit countries, and countries have been forced to take action to restrict economic activities in order to stop health crisis from happening. So without further ado, I'll try to look at the reasons why the performance was wildly different. First of all, a fairly obvious reason is the health situation. The worse the health situation, the worse is the confidence in the economy. People are more afraid, they delay investments, they stop consuming, they save more, they cannot go out, and therefore economy is stopping by more. So the first one is very, very obvious, and it's not a perfect correlation, but usually countries with worse with worse health outcomes had also worse economic outcomes. The second one is very related to the first one, is how countries reacted to the health crisis. Here you can see the stringency index by Oxford Economics. It tried to track how tough the restrictions were, how tough were the lockdowns, how tough were the quarantines, and you can see I picked several countries with different strategies. You saw China that cracked very hard and very early, and many countries copied that strategy, and it seemed that they were rather successful. You had countries like Sweden who is sort of an outlier with a fairly mild lockdown, and at first it was just a curiosity. Then the country was very criticized for its lenient policy, but now it would seem that as the cases are resurging, it's again not clear which strategy was the most successful, and we'll see in probably when all this pandemic situation blows over, then in retrospective we can evaluate which strategy has been most successful. But overall the decision was, do we take a very painful hit in the short period of time and can take the disease under control, or do we spread it out and we have a more chronic pain over a longer period of time? And these strategies have different outcomes. They change the shape of the recovery, but it's unclear which strategy would be the best at the moment. Apart from the health situation, the structure of economies matter. What types of goods we produce? Are we a service economy? Are we a goods economy? How dependent are we on tourism? All these things matter when we're facing a shock such as this. For example, in Lithuania, there's some sort of anecdotal evidence. For quite a while, we have been quite bashing ourselves that we don't have enough higher value added manufacturing, that we have this sort of low to medium value manufacturing in food industry, in furniture, etc. It turns out in pandemic, that's great, because people need to eat. They found themselves locked down at home without an office desk, and suddenly they need to do homework with their children and work from home. Furniture has been doing very greatly. And countries that had non-cyclical industries that for whom demand does not change, whether it's good times or bad times, then that made the Lithuanians' performance better than average. No one is buying cars when they're locked down in the quarantine. That also means that no one's buying car parts from Czech Republic, Slovakia, Hungary, etc., the countries that are very integrated into German automobile cluster, and a lot of people were envious in Lithuania for them because they have been earning good money, but now their integration into these sectors has been a serious disadvantage. Other things like tourism and balance of tourism services also mattered. Italy suffered a lot because they depend on tourism a lot. Spain suffered a lot because they depend on tourism a lot. Germany, Sweden, Lithuania, not so much. So on the net basis, we either suffered not a lot or just a tiny bit because of lost tourism revenues. So I cannot go into every reason, and there is anecdotal evidence for every country why they suffered more or less during this pandemic, but the main outtake is that structure of how we earn our money in every country mattered in determining the damage. Second, Hansen, Morten tried, not tried, but started talking about this, is how sustainable was the business cycle before entering the crisis. And he rightly pointed out that Baltics were very, very balanced in just before the pandemic hit. This is an index we do measuring the sustainability of the business cycle, how overheated the economy is. So you can see the stark difference between 10 years ago and now. The economies were in very balanced state, and that meant that we were very well prepared to face any challenges presented by the pandemic. Also, what we saw is another thing that matters a lot is debt, of course. Here I highlighted more private debt rather than public debt, because I feel that in these sort of situations, first and foremost, the private debt matters more when the economic shock hits. And luckily, the authorities, the central banks, the budgetary institutions have acted very quickly this time around, and they learned from mistakes of poor policy in the last crisis, and they really managed to make it so that financial crisis did not happen on top of it, because we would be much more gloomier now if a lot of money had not been poured into our economies, if there were no tax relief, if there were no liquidity support, etc. And you can see the extent of money the 5 main central banks of developed world have poured in the last half a year. The money supply, bank reserve supply grew by around 20% in a record period of time. And as you can see, initially there were a lot of fears in the interest rate markets, which very quickly signaled the stress and fears of the business world. And Euribor had started rising quickly because people were afraid of a financial crisis. And then by half of the year, everything is calmed down. Financial markets are no longer expecting any financial trouble in Europe. You could look at various different indicators and they would signify the same thing. So monetary stimulus has been very successful. Of course, it has side effects. We are seeing some asset prices disconnected from the economic reality, but overall, the policy has been quite successful in containing the damage. And finally, this time around we're seeing not an austerity policy, but fiscal authorities also had learned some from their mistakes from the last crisis, where fiscal policy was really inadequate and meant that growth was much slower in Europe than in other places where fiscal policy was present. And here I disagree with Morten. I feel that European Recovery Fund was a necessary thing because Morten very nicely highlighted the benefits of the euro, and I feel that without some fiscal transfers in the European Union, euro would be no more, because Italy, Spain would really question whether fiscal constraints brought by being in the euro are worth it when they really are in dire need of having more accommodative fiscal stance. So as you can see, countries do have varying fiscal firepower, and Germany was really impressive in shooting all the fiscal cannons they have. And that would have further exacerbated the differences between countries' performance. Countries such as Germany, they had suffered relatively less damage due to the economic structure, and they have more fiscal firepower. Therefore, they would recover quickly than the countries that were hit the most. So the role of the Recovery Fund is very important because it sort of smooths out a little bit the differences between the country's ability to spend, and that has a very important role in managing to keep European business cycles synchronized, meaning that some countries are not shrinking while others are growing. That means that the general policy of the euro area fits for every country, and that it makes sense for every country to be in the euro, because euro is a very beneficial project. However, it is not complete, and it's always under some risk of breaking up. So this is a very important step in completing the institutional design of the European Economic Union. What's next? I've showed you some projected paths how economies could recover, but it's not set in stone. Every factor that has been relevant up until now will be relevant for the time to come. How quickly the treatment will come, how successful and efficient monetary and fiscal stimulus is, how will the trade war look, how will the Brexit look, how will the US elections look. All these factors will determine how the shape of the recovery will look. Currently, economies are recovering quite quickly, and a lot of economists are getting more optimistic than they were 3-4 months ago. Here you can see an economic activity indicator I tried to do in the midst of a quarantine, because as some of you might know, economic data is very, very lagging. We were running completely blind, and we tried to find alternative data to see how economy is doing. So this uses a lot of bank data, a lot of public data, and we currently see that economy is on a good track. We'll see how it goes in autumn and during winter, but so far there is reason for optimism, but of course the times are very, very uncertain, and I think you'll have questions for the panel discussion. Thank you very much.
Thank you very much, Vytenis. Please take your seat. Now we'll have the panel. To avoid any risks or to manage the risks, we decided that it should be a live panel. So I would like to invite Jekaterina, and I would also like to invite Lina to join us, so that we have at least 3 panelists, and we won't be trying to connect to the speakers who are away. Now this is the timer, and we are. This is to stress that we are stretched on time, but I think still we should take the benefit of having the panel. And thank you very much once again for joining, and thank you very much everyone who asked questions. I think we have. Well, we have too many questions to answer, which is great. So thank you very much for doing the effort, for asking the questions. And I can see also that some of the speakers have started answering, so thank you very, very much that we make this discussion really interactive. and this is how conversant we are with the technologies. So now I will start. The most popular person to whom the questions are addressed is Jekaterina. And of course we will not ask all the questions to Jekaterina because that would become a kind of interrogation, and this is not what we want to do. But still, basically, one question that's, I think, and it's, some of them are related, so I apologize if I generalize, but I would like to ask Jekaterina one question out of the many that we have, and that is related to the some kind of tension that some people in the audience are seeing between the central bank policy and the Lithuanian government policy, well, I should say Lithuanian government policy primarily, of welcoming the FinTechs and creating favorable conditions for the FinTechs. And the question the person asking is why FinTechs are so welcomed by the state institution and so much unwelcomed by commercial bank? Is it fair to call us a FinTech country in such a situation? What could you say? Let's see, maybe this one is better. Yeah.
Yeah, probably somebody needs to create a gateway, and somebody needs to be a gatekeeper. So maybe banks are providing this gatekeeping activity. But I'm joking, of course. I think that it just coincided that banks operating in Lithuania right now, the major banks, they were fined, and were fined quite severely. And it forced them to rethink actually their strategy, especially regarding onboarding of FinTechs. It's the first reason, and as our market is really small, we have, as we sometimes joke, 2.5 banks operating in Lithuania, but again, it is a joke. And the other reason, I would say that FinTech have some bad repute in some sense, because we sometimes think about cryptocurrencies as FinTechs, and we very well know that cryptocurrencies have quite a bad reputation. So it's, I would say yes, probably banks are a bit more cautious than they could be, but I wouldn't tell that it is like a situation with no-go, that there is no chance to open a bank account. Yes, it is quite complicated, but it's not totally impossible.
Yeah, thank you. Thank you. And of course, we've had experience also ourselves that no, it's not at all impossible. But of course, the question I think is legitimate. At the same time, the answer probably is clear. This cannot be a one-way street, or otherwise we risk the country's reputation, and then it will not be a FinTech country because we won't have all the other benefits that are necessary to create it. Lina, may I ask a general question, which was also very popular, and which is, I think, but still, it's really interesting to hear different experiences, and we'll be hearing them, I'm sure, during networking also. What has been the best learning outcome so far of COVID-19 in your organization, or generally? You are chairing the Chamber of Commerce, so you're seeing a lot of businesses.
Yes, I guess I will have two-folded answer, and I'll try to be brief. I guess, first of all, representing Intrum and the credit management industry, I must say we had quite a lot of insights during the times of COVID. Firstly, because credit management industry per se operates in anti-cyclic economical environment, so it can be presumed that, like tough times brings better opportunities, which I guess, fair to summarize, they do, to an extent, of course. But what we have seen so far in terms of, let's say, B2B relationship, we have seen that when the times are good, nobody is really so worried about the cash movements. and because they can sustain certain, amount of capital being frozen, etc. So what we can see quite a lot in the industry, and that's especially in Lithuania, I must say, but consistent across the Baltics and I guess the other Nordic countries. There are much more interest from the companies to help manage their cash flow in terms of really earlier reminders, collection, etc. So the cash is the king, of course, in the terms, especially in the times of COVID, and really survival techniques are taking place at the time. Also, it's important to also monitor the consumer trends, and we know that there was a lot of turbulence in terms of employment issues and other reasons why people maybe could not pay their bills or handle their finance as well as they might have expected. So it was very important to see what measures are being taken place to allow this grace period for people to recover, etc., etc. So we also have seen that in our industry, because there was a lot of proactive reach out from the debtors to really find the solution that would be COVID specific, let's put it this way, which shows that we really have an increasing awareness of people and financial education and how people treat their funds and their personal finances. And we really, as an industry, collaborating with a few other organizations, are very making our mission to continue to improve the financial education in order to prevent negative consequences when it comes to personal finance management. So these are very, I guess, generic trends that we can see in our industry that will, I guess, continue to be quite important going forward. And from the Chamber's perspective, I must say that it's a very big disruptor for some of the businesses, of course, especially on the business models that are based on real contact and networking, etc. You pretty much have to rethink on what's the purpose and what you're doing. So it's, as I said in my opening speech, it's very great to see that a lot of people are still really looking forward to like contact, but it was a challenge to really think of how we, what we do in the future, really. And I think it's going to be very important topic for many of the businesses to see how this trend has reshaped the business for good, maybe, or at least the foreseeable future.
Thank you. Thank you. That was a detailed presentation. Thank you very much. Vytenis, now there's a question to you which I will allow myself to expand a little bit, because we in Lithuania, we are, very international. And of course, if you ask any person on the street, they will be interested and they will have an opinion on some of the things you mentioned. And I will pick two, the Brexit and the presidential election in the US. So you said 50 shades of we. So what will be the impact of for Lithuania? The Brexit, hard versus semi-hard, or whatever we can call the agreed Brexit, and Trump versus Biden, please.
These are tough questions. I mean, all the problems that we had before COVID-19 pale in comparison to what we had, and before February, when virus was taking grip of China, well, Brexit and trade war were the main topics, and they moved the markets, and some people were even expecting a recession due to these reasons. Now these factors seem not as significant in comparison to what we're living through. There is a severe risk of no-deal Brexit currently, because UK is taking a very tough chance. However, this has been such an old topic that probably most businesses that have any significant relation with the United Kingdom have taken care of it, or it's their own fault by this time, because there really has been 4 years to prepare for any disruptions happening in that front. So yes, there would be a damage if countries are not reaching an agreement, and the most sticking points were the fair competition policy, because UK wants to compete illegally, and that's the whole rationale for Brexit. They want to have advantageous competing position with the EU, and the EU does not want to allow that. And the second point is the fisheries. EU wants to keep fishing in UK waters, and as they did for the past 40 years. And UK also does not want that, and for some magical reason, that is a very important thing in Europe. Regarding trade wars, I think, and Trump versus Biden, I think, well, if Trump wins, we'll have 5 more years of very heightened political uncertainty and probably fraying US and EU political relations, and it's probably not beneficial for us. However, the adverse stance towards China from the US is probably cemented by now. It's probably the only issue both Republicans and Democrats agree on, is to have a tough stance on China. So Biden victory or Trump victory will not change probably much in that regard. You'd probably just have a little bit more predictable policy from the US side if Biden wins. But overall, geopolitical priorities would not change. Overall, today's probabilities from 538, one of the most popular betting sites and forecasting sites of politics, say that Biden is set to win by 71% probability, but it's anyone's game, really.
Yeah. Thank you. That would be a tough question to answer, who wins. Now we have time for one question from audience, a live question. I mean, take the chance. I think that will be the first question since March asked in an audience. So making history. No questions. Well, I'll use Slido then, but this is the chance to lose because we are having only 3 minutes left. Anyway, so maybe since, as I said, Jekaterina was the most popular, so I will direct a question to you, if I may. And there was a question about the AML Excellence Center. And maybe you can tell a little bit more about it, because there's a person asking is how it is going to mature the local industry and how it is going to help, how it is going to work.
Yeah, I just noticed that we just exchanged the mic, and that's how exactly the virus is spreading. So we need to wash our hands afterwards. Yeah, AML Center, so just briefly, I can expand really and speak about that for a very long time. But the major idea of this center is to get the possibility to sit around the table for both industry, and by industry, first of all, I mean banks, and why banks? We usually get the question, why only banks? Why not maybe EMIs and PIs or some other companies? And the reason behind that is that banks have this major competence about money laundering. They have seen a lot, they see a lot, because about 90% of all the payment transactions, they are taking place through the banking system. So it would be a possibility for banks, for FIU, our FIU, for us as a supervisor, for policy, for our police and even prosecutor's office to sit around the table and to speak about what is happening, what are the typologies of the criminal activities that are taking place in the country, and how we can tackle these risks by maybe developing common solutions, which I spoke about briefly during my presentation. So this would be like one task of the competence center to share information and to work on common solutions. The other direction would be to develop maybe some learning programs for AML specialists, some conferences, etc., in order for them to be like well informed about the requirements and about the expectations and etc. The other direction which we will be developing in the future, and what is taking place in UK actually, this format is a good possibility for some police officer to come to the banks and to ask information about a specific person or about a specific company that this police officer thinks that is engaging in some criminal activity. So it is really a simple format to collect all the necessary information just in one day. So that's maybe in a nutshell like what we expect from this AML center.
Thank you very much. Thank you very much, dear panelists. Thank you very much for your patience in the first part. Also with all the technical difficulties, but we made it, so thanks and congratulations. Now we are a little bit behind schedule, so I would like to ask you to use 20 minutes for the coffee break, if that's okay. And that means we are back here 11:25 sharp. We start 11:25. So thank you for the first part, and please welcome to some coffee in the vestibule. So we continue. We continue to the second part, and thanks very much for staying. You know, this is the biggest. There are several big challenges in conferences organization, as I started telling you. And one challenge is that organizers sometimes don't want to have any breaks, because every break brings fewer people back than they were before break, and now we are challenging this assumption, because all of you are back here. And this is also wonderful, and maybe this is the good new normal after COVID also, I don't know. Let's hope so. So the next speaker is Morten Georgsen. Again, I'm very sorry if I'm mispronouncing. He is CSO of the P27 Nordic Payments Platforms. I'm not on. Ah. Okay. Good. You heard me. People online didn't hear me, but I'm inviting now Morten. And I was saying that Morten is CSO of P27 Nordic Payments Platform. Morten has 18 years in Danske Bank behind him, covering a broad range of positions in global head of pricing and capital and head of structured finance. Morten will share with us his thoughts on how to build a fully integrated payment region across the Nordics. Morten, the floor is yours.
Actually, can hear me. It works. Okay, I understand that. So thank you very much for having me here, and thanks for the nice introduction. So I am coming from Nordic Payment Initiatives, working for a company called P27. I understand that there should be a film sent over to you that we should start with now. I hope it's prepared, so you can run that one.
Right now, the world of payments is changing fast. Digitalization and new tech are creating opportunities for people and companies to pay each other and make local and cross-border transactions. This is why the leading Nordic banks have come together to change the underlying foundation of how we pay, and together created P27. We are here to leverage all these possibilities by building a rock-solid platform that empowers new, innovative cross-border payment services at a fraction of the cost of traditional solutions. What sets us apart is the way we are disrupting the industry and breaking down traditional barriers for cross-border and direct payments. We're creating a new ecosystem for secure and effective payments and transactions. Does it sound bold? Not really, right? Because although we are a young and pioneering initiative, we have dedicated owners and a team that shares a common aspiration to orchestrate the transformation of future payment solutions. We are here to change the world of payments, and we want you to be a part of our journey.
So thank you very much for that. I hope you all heard the sound, and also you that are participating remotely. And thank you very much for having me here. The initiative I am coming from is something that is sponsored by Danske Bank, SEB, OP, Swedbank, Nordea, and Handelsbanken. It is a project that has been going on since early 2017, and I am, just as you say, the CSO of the company. But before starting to talk about P27, I would like to take a step back and think about why an initiative like P27 actually ever has been built. There is actually a lot of things going on right now in the payment space, both in the Nordics, but also outside of the Nordics. So if we start from the beginning, the economy in many different places is in real time, but when it comes to payments, we are not fully there. We make payments, they are booked at an account, but it takes many times a day or a couple of days until it actually is withdrawn from the account, settled and sent over. That doesn't fly in the future. We are consuming in real time. We need to have models that actually takes care of the payments fully and all the way through in real time. And there's been a dialogue about this for a long time. What we are looking into at P27 is true real-time payments. So we are talking about a fraction of seconds. On top of this, there is really a lot of initiatives going on that is initiated by authorities and regulators in the payment space. We have a couple of examples here on this slide. Open banking, everybody has been talking about that for a couple of years. We have initiatives like PSD2. We have initiatives from ECB with focus on how we can do instant payments, etc., etc. And the market is moving at the same time. Some of the regulatory stuff is coming from the fact that there are many fintech companies that are developing solutions in the payment space. So there are many reasons why the timing actually is here to do something about payments. And if I proceed here and try to explain the situation in the Nordics, we are having in the Nordics payment infrastructure systems that are old, that are expensive, and that are very, very fragmented. So when a bank, for instance, shall do a change in one country, they need to do it all the way around in that particular country. Then they need to do it again in another country, and they proceed like this. Only in the Nordics, we have today 9 different clearing systems, and this simply doesn't make sense to do in such a fragmented way. We should not forget that payments, that is a very, very big volumes game. So you have very big advantages if you can do this jointly together. The products, they differ. And just as you said in the beginning, I'm coming from Danske Bank, and I've been working with this for a long time to try to optimize and make sure that we have the right products and solutions in all countries. But we need to adopt them, we need to adjust them, and all of these sort of things. So there is no standard of how this shall be done. There is no standard in the rule books either of cut-off times and all of these sort of things that you need to have in order to make payments. So by taking all of the things happening in the world when it comes to payments and the particular need that we have in the Nordics, we did create P27. And the purpose of this is to build a payments region in the Nordics based on one and the same standard and one of the same prerequisite for delivering seamless payment solutions to the banks and to the end customers, of course. So I think that is very much the story and the background for why we are here and why we are alive. And I normally say, when I get a question, what is the big progress of P27? I normally say that, yeah, if the idea behind P27 wouldn't be as good as it is, we wouldn't be here today, because this is difficult, it is challenging, and there are so much history behind how the payments world works, and that means that you need to give and take when you do the changes. But what we always come back to and push when we do changes in the and push the initiative forward is about the fact that this really makes sense to do together. Here you can see 4 different bullets, and that is very much the big change that P27 actually will accomplish. I said in the beginning the story about instant payments, and that is true. We will of course also come with a solution that will offer an alternative to the batch systems that is out in the payment space today. So P27 intends to offer both instant and payment and batch system, but what is new is the instant offering, and to do that on par with the pricing and the conditions that you can do the traditional batch payments with today. And by gathering all of the volumes together, we can offer terms and conditions for these solutions that haven't been seen before. When it comes to security, when doing something like this, you obviously need to upgrade this security really a lot. And what P27 will develop and deliver in this space is active systems in multiple countries and jurisdictions. So if one system is down, the other one will jump in instantly. And then the last thing that is very important to bear in mind is the increased conditions for creating a level playing field when it comes to competition. We will bring a pricing model to the market that is having flat prices in all countries. So we will really push down the barriers to entry for the smaller participants and smaller banks to use our services. In the trade, you can say that we are in between the banks and the central banks in the value chain. We will never ever offer solutions to the direct customers. That is not what we have in scope. Also, when it comes to the offering that we will have to the market is pretty much two things. First, we are an infrastructure company. We will develop a single clearing platform for the Nordic countries. We intend to implement it in Sweden, Denmark, and Finland. And as I said, just both batch payments and instant payments. So pretty much all the type of payments that consumers are using, except for credit cards. On top of that, obviously we have plans for enhanced services that the end user can buy from the banks. And then we are talking about services that make sense to do on a Nordic scale to create the reachability and standard based on the single clearing platform that we are developing. An example is direct debit schemes. And another example can be solutions when it comes to fraud and monitoring. On top of this, there will always be local competition and there will be local needs from each and every bank. That is a space where P27 does not intend to be. Instead, that is something that the banks needs to work on and develop and offer. So I didn't have a lot of time today, so I will try to conclude a couple of things here. So if you should think about the Nordic Payment Initiative, something that is very important to remember is the first step towards all being instant. A solution here that actually will help the corporates to improve their payment models and also take down the system risk. That is kind of key. That is the starting point. And then to create a situation where the cost for making a payment will be kind of redundant. It will not be in scope. And also the user experience for the end customer, it will be not more complex to do a cross-border payment than to do a domestic payment. So obviously that will create a good initiative and incentive for cross-border trade and for further growth in the countries that we have good experience from before when not really initiatives like this, but similar initiative when it comes to payments to enhance the possibility to do cross-border payments that actually incentivize growth quite a lot in between the countries. So I think this is the clutch. This is the message from us. We will continue. We are quite close to doing the first payment. What we have said is that we shall try to do it somewhere next year. And the first payment we intend to bring to the market will be Swedish krona batch payments, but the other currencies and schemes we will bring out will come in a very close follow-up sequence after this one. So bear with us. If you come to the Nordics, you will soon use our services, and let's hope that it will make the life easier for the citizens of the Nordics and people visiting us. That was it from me, and thank you very much for having me here.
Thank you very much, Morten. It's amazing how the market works as an ecosystem. Even in competition, the one segment, the FinTechs are moving in one direction and are competing with the banks in making easier terms for payment. Now the banks responding with further innovation, and this is how in free economy we grow. This is great. Thank you very much, Morten, and good luck. We are looking forward to making those payments in the Nordics. Next speaker is Darius Klimašauskas. Darius is representing KPMG, and he has more than 15 years of experience in the local and international markets. And probably he is one of the best persons in the region to speak about COVID effects on banks and FinTechs and on their clients and what the future holds. Darius.
So, hello, everyone. First of all, I'd like to say thank you to Lina and Vilius for organizing this event. It's awesome to be speaking live. I'll talk about, as Vilius said, about the post-COVID effects on banks. For those of you who don't know me, my name is Darius Klimašauskas. I say that I am a deal specialist. I work at KPMG, and I work with my network to help clients close deals. For the benefit of Lithuanian clients, we utilize our network. And it just so happened that through the years, I got a bit of a specialization in the financial services sector. As you can see, I've put in some of the deals that we concluded. It just so happened that quite a lot of them were in this space, and we did a lot of portfolio deals, and now we're helping a lot of newcomers in Lithuania as well. So I'm very happy to have the opportunity to talk about my experiences there and what I see both working with the big banks and with the newcomers. So when we think about post-COVID and the effects, I tried to structure the presentation in such a way to cover many things. So I came up with a few things that I won't cover, because I think they will either have been covered or just take too long. Obviously, when we talk about the effect on the banking sector, we need to talk about the government policies, but I'll try to stay away from that. Maybe we'll have that for the panel. So I thought to structure it in a bit of a different way. I'll set the scene. I'll talk about what the effects are for the big banks, the incumbents, then sort of discuss about FinTechs and newcomers. And as a conclusion, I'll take part 3, so looking through the eyes of the client, what can the clients expect then to be sort of the outcome of what I'll discuss in the first 2 parts. So that's more or less my structure. Does it sound interesting? We'll see, right? We'll see how it goes. Okay. So let's start with one. So what are the effects now? So now, just to set the scene, I'll show you a few slides about things that you probably already know. Okay, so the first thing that we have to remember, what happened post-COVID, right? What happened post-COVID was that the Central Bank of Lithuania, they eased the counter-cyclical capital buffer. Basically, they came out and said, look, we had these imposed. Now it's a situation where we can let the banks lend a bit more. And one way to do this is through the policy. And according to the bank's old calculations, this should have amounted to about 1 billion euros in Lithuania of corporate lending. That was sort of their idea. They said, okay, banks should be able to lend about 1 billion euros. So this happened in March. Now in April came, and we had another very, very interesting thing that happened. We had a moratorium. So all the banks got together and said, we are okay with changing the schedules for those clients who will find it difficult to make loan payments due to COVID. Okay, so that was a nice idea. And again, the idea of the banks here, together with the central bank, was to make sure that we don't run into a liquidity crisis the same way we did as in 2008, where we had both a capital crisis and a liquidity crisis. So they said, for the liquidity part, we will restructure. We will allow clients perhaps to pay just the interest part for a few months. So they said, for the next 6 months, up until October, this is what we're going to do. Now, this has a very, very interesting effect when you think about the client, obviously, because the client pays much less money. Also has a very interesting effect on the banks themselves. Because typically, according to accounting rules, if a client is late in a payment or a payment is rescheduled, potentially this loan becomes no longer a performing loan, and possibly the bank has to increase provisions for that. But for the time being, we're in a situation where this is not the case, and banks may not have to think about it directly today. Okay, so what else has happened? We talked about this a lot, so I won't talk about it a lot, but there's been huge influx of capital. We're going to have a fund now, which is going to lend about $1 billion of liquidity. These are last Invega statistics that came out just 3 days ago, so 300 million euros of Invega money have already reached the market. All in all, the figure is 5 billion. So this is what we hear in the news, 5 billion for our economy. 5 billion euros is going to be coming to companies. So we have to take that into account as well. What's going to be the effect, or what has already been the effect of this? One thing that you may conclude from my first 3 slides is that we should have seen an increase in banking. But if we look at the statistics of ECB, Lithuania is one of those countries which has basically had a 9% decrease in the corporate lending portfolio in the last 12 months, looking at statistics of June 2020. Now, why has this happened? I mean, there are several reasons, obviously. I totally understand why the banks don't want to lend more. They look at it from a risk perspective, and they know that this is not equity coming into the companies. This is debt. This is debt which has effect on the covenants, debt which will need to be repaid by those clients. What else could be happening here? Perhaps newcomers are coming to the market. So if we look at just the big corporate lenders, maybe their portfolios are being taken over by the credit unions, the FinTechs, that could be happening. So quite a few things are happening. My first question to you today was, if we remember the slide that we had, so we have 300 million euros of Invega money coming. Invega puts the money in the market in 2 ways, basically, 2 directions, by themselves and then through banks. Now, if I had to ask you to guess what kind of percentage does Invega do through banks, through other market players in the market, what would your guess be? What percentage of this 300 million? Close to 100. Well, okay, so Invega is not as bad as one would think. They do still have a lot of channels, but yes. Do you agree with close to 100? Does anybody have another view? 1%, which would mean that everything goes through Invega? Okay, so 2 pretty marginal answers. Good. The actual figure is 82%. So 82% of this 300 million was disseminated to the Lithuanian market via banks that are working in the market. Now, this is one of the things that I think is a big positive, because now definitely this is an outlet for the newcomers. So for the big banks, these tickets may be a bit too small, but for example, SME Finance says that already 12.3 million euros have come through them, and for them 12.3 million is actually quite a reasonable part of their portfolio. So I think one of the reasons and one of the positives in the markets for the newcomers is that they're utilizing their situation for the benefit of increasing their portfolio and footprint on the market. So that's one thing that's happening. What else is happening? So how about the non-performing loans, the NPLs? So this is a bit of a tricky situation, because I have a feeling that now banks are having a bit of a tough time identifying which loans are really non-performing loans, which loans would have been non-performing loans were it not for the moratorium or the increased influx of money into their borrowers. So these, I would call them 2B NPLs, the performing loans that would have turned into non-performing loans, are really not really distinguishable from what I would call COVID PLs. So these loans are a bit disguised. They may have become bad loans, but now all of a sudden there's so much money and the rules are a bit lighter, so now they're no longer real non-performing loans. What could be an effect of that? Well, I think for the banks, obviously it's an issue about portfolio quality. And if we look back at the crisis of 2007, 2008, it was a credit crisis. Nobody could really understand how it happened that the portfolios of the banks were so bad and nobody had noticed. And so for 10 years since then, we had really, really, really strict rules. But now this could be one of the effects that we need to keep our eye on for the bank portfolio quality. What's another outcome? So some of these NPLs, as we discussed, have now received funds and grants, so they are in better shape. So the banks would have had a real sort of trouble getting these things off their books, but now these companies get the funds, so now they're in better shape. And I think this is another interesting that will happen in the next few years, is we're going to have a portfolio market. So banks will start offloading these, whether in portfolios, whether it's non-priority assets or to change the structure for any reasons. And there are lots of buyers in the market because now these loans look much better than they used to. So the bank wants to get rid of them and even get a bit of money off of them, and there are lots of buyers in the market, many companies such as Intrum and other market participants who are very happy to take these assets on because they have a bit of a higher risk tolerance, or are risk management companies. So my prediction is next few years we'll probably see a bit more banking portfolio deals. Third thing, well, yes, clients love themselves some grants and some aid. But if you take over too much of it, I think a big issue is going to be when you come for refinancing. Because if you have relationships with the banks, basically you have covenants which you cannot breach, whereas the rules for getting state aid are much more vague. But you'll pile on that debt as a client. And what happens when you need to refinance, you may find it very difficult to talk with the banks. I think my main slide, which I wanted to show, is the sort of kicking the can down the road slide. So the moratorium should end, or let's say was designed in such a way that it's a temporary measure, and October comes, the central bank and the commercial banks will need to make some tough decisions. Do we prolong the moratorium or do we not? Either way, there will come a day when the moratorium, I think, will end. And I'll talk about this more in the final slide, but this is something to keep in mind, that the good times that we have now may suddenly come to an end based on various parameters and not necessarily in the best time for the clients. So let's keep that in mind and let's see how the FinTechs are doing. So the FinTechs. Well, I think FinTechs overall have a bit of a different situation in the market. Obviously, the thing that we talk a lot with our clients now is cost of risk is low. Again, here we have another article from SME Finance, and they say that the quality of our portfolio is even better than pre-crisis levels. It's only 8%. Are we surprised by that? Well, when you think about how much money has been poured into clients, I think it's hardly surprising. However, if we look at our history a bit, so this is a graph from the Bank of Lithuania showing percentage of non-performing assets as part of the portfolio. Okay, yeah, we're, people typically use this graph to show in what good shape we are as an economy, and I have to agree with that. But I also remember the not so distant future where the percentages were very different, and this is where we may be heading. Of course, you can say that in 11 and 12 we still had heritage from the vintage 06, 07, 08 portfolios. I agree with you on that. But if we pile on enough debt on companies, we may be coming back to a bit of a different situation. So for FinTechs, this is a huge risk in my view, because they have designed their models and their business plans mostly according to the good part of the economy, the last 3, 4, 5 years, where cost of risk was very, very low, very, very low. So for them, this might be something to think about going forward. Regulatory. I'm glad I don't have to speak a lot about regulatory because Jekaterina and Federica covered it a lot. But again, for banks who have people, who have structures, it's easier to swallow this pill of regulatory costs rising rather than fintechs. So what's going to happen to the fintechs? I know Justinas is going to talk after me. Hopefully he'll share some ideas. My take is, as an M&A specialist, that probably we'll see a lot of fintech deals. Fintechs will want to be bigger, so they'll start merging. They want to have a bit more of a cost base. Two things are happening as well that I think will facilitate that process. One, fintech funding is falling. If you look at the statistics, typically it will be that the figures themselves are high, but they're going to a much smaller number of fintechs. So private equity funds, VC funds, they love themselves a bit of the big ones, but the smaller fintechs, they're finding it a bit of a different situation now. So this will lead to deals as well, mergers. And always interesting is to track deposits. Deposits are flowing into banks. We see that in Lithuania. We see that in the US. We see that in the UK. So the more, let's say, in uncertain times, I would argue that fintechs will find it hard to get clients and get money. These will tend to flow to the more established players, which have more of the market trust. So to conclude, let's look at this from the eyes of the clients and see what's going on. So how will this affect the clients? So my Inglorious Bastard slide was the one I came up with because I thought there's three things that are going to happen, and the situation may change very, very quickly, just as it did in that movie. So what's going to happen to clients if we think about the moratorium and the potential of that situation being lifted? Well, the first issue for them is going to be that it may come at a time where they have not balanced, let's say, their cash flows, and it is not they don't know which time it's going to be. So if you tell anybody you're going to have to repay a loan or in 3 months, 4 months, it's going to be a very tough situation. So there's a lot of uncertainty for clients. 2, the clients will be used to paying just the interest part on loans. They will not have made the tough decisions that perhaps they would have made in a different situation. Yes, that would have had a positive effect on the business, I agree. But if banks give them a call and say, from tomorrow you're going to have to pay not just the interest which you're used to, but your actual payment will now be with the principal, again, the clients may not be able to service these loans. And 3, the payment themselves will potentially be bigger. Because if you have enough of sort of vacation time and just pay the interest, now the resulting payment will actually be even bigger than you had pre-crisis level. So this leads me to believe that banks should have these discussions with their clients today. So not to have very many unhappy clients somewhere down the road. Finally, I already talked about less trust. There was a very interesting survey done here in Lithuania about how many clients changed their banks in the last 5 years. I think it was conducted by General Financing. I couldn't find it. So your estimate in Lithuania, if the question is how many, they ask clients, have you changed your bank provider in the last 5 years? Yes, no. How many people said yes?
20%.
20%, Vilius, that's a good guess, solid guess. Just 20%, anybody willing to go higher? 10. Accountant, conservative, risk averse. That's exactly correct. It was 14%. So even though fintechs get a lot of coverage, really they can only tap into a certain, let's say, a certain part of the market. Innovators, early adopters. So with 14%, this is more or less where fintechs still are. Again, Justinas may give a bit of a different picture. It will be very interesting to hear. My feeling is, again, in times of uncertainty, these clients also tend to drift towards incumbent banks, the big banks, the safe banks in their view. A similar survey in the UK said it was just 9%. So this is my second conclusion today. in times of uncertainty, FinTechs may have a hard time getting clients. And third and last conclusion, again, tougher regulation means, in general, less clients and less risky clients. And it will come as no surprise to you to know that, in general, lots of the profitability generated by FinTechs and payment institutions come from the risky part of the curve, from the clients that banks, as Jekaterina said, say no to or don't onboard for different reasons. That will be squeezed a bit as well, and clients themselves may have less and less options to do banking, unfortunately. That's it. Those are my three conclusions. I'd like to leave you with kicking the can down the road graph, which I think is a very, very important thing to remember as we go further through this post-COVID era. Thank you.
Thank you. Thank you very much, Darius. Very interesting insights. And now, as Darius has already announced for us, we will hear on challenges of traditional banks, opportunities for FinTechs, and vice versa. From Justinas Badaras. Justinas is Business Development Manager at Bankera, and he brings experience in finance and managing projects within FinTech industry and one of the largest business holdings in Lithuania. Justinas, please, the floor is yours.
Hello, everybody. Yeah, just checking if it works. It works. So thank you very much for the introduction. Thank you very much for organizers for organizing this. Thank you very much for previous speakers. As Darius mentioned, yeah, there's going to be some mutual points in here, and I will add on top of his presentation. So I will talk today a little bit about FinTechs versus banks from a perspective of a FinTech, and essentially like what challenges we see as FinTechs and what opportunities we see as compared to banks. So this is the agenda for today. It's actually quite simple. So the first part is what spurred the growth of payment FinTechs. This is with a focus on electronic money institutions. The second part is the obstacles payment FinTechs can't yet overcome. And this is the part where actually banks show their superiority and we're very much better than us. And the third part is, what's waiting next for us. So as you all know, the number of payment FinTechs has grown really fast. And as you can see in the charts of the number of EMIs and payment institutions that are using Centralink essentially went from almost 0 to 100 plus in just a few years. And this was influenced by several factors. Like there was a lot of attention from the Bank of Lithuania, from the Ministry of Finance, and they provided access for EMIs to use the Centralink system. Also, they invited businesses by getting a license quite a short time to get. And also they promoted Lithuania as a FinTech hub by showing that we have a low tax rate, we have a good ease of doing business, and so on, and a good workforce. So the result is that not just in Lithuania, but also in other countries in Europe, the number of EMIs and payment institutions is really high right now. And not just the number, but also the transactions. We're starting to become, we're starting moving a little bit from just startups to actual market participants. And as you can see that the value of transactions by EMIs and PIs last year was almost 45 billion euros in Lithuania. And as EFMA stated, we're saying that FinTechs actually are moving from the startup position to becoming mature market players and heading towards profitability. So, as Darius mentioned that, very few people actually change their payment providers. So I will look into why individuals go for FinTechs. So why do they change their current provider, a payment account provider, for a FinTech solution? And as you can see in the quote, that this relationship of staying with your payment account provider is really stable. Like on average, people stay with their accounts for 17 years. This is longer than, on average, people stay with their partners. So this relationship is really strong, but it took something, to break it. And EY did a study in 2019. We took the main reasons why people change their payment account providers, and the number one reason was not the sexy look of the app. It was fees or rates. And there is one guy in the UK that did an experiment. He tried opening an account in 12 incumbent banks and also challenger banks. And also he tried to make a transfer, international transfer from the UK to the US, and to see what the fees are for the user. And as you can see in the top, it's mostly challenger banks, and down below it's mostly incumbent, traditional banks. The reasons may be numerous, probably that the challenger banks were using some solutions like local payments, currency cloud, or TransferWise, and the incumbent banks were using more traditional ways such as SWIFT payments. The second reason is that it's simple and easy to open a payment account with a challenger bank, with an EMI institution. So he also measured that it took just 2 days from the actual registration to using the card, to using his account in a shop. And yeah, the situation is also quite similar. The process is longer with incumbent banks. Some of the reasons included 18% of respondents said that they use it for different products, such as using your app to invest, using your app to budget, using your app to save some money in the vault. 12% stressed a better experience. So essentially, yeah, it's the sexiness factor that the app looks nice, it takes less clicks to make a payment and to do other operations. And other reasons as well, such as, some people want personalized products, some people just want to try a new thing, and also remote opening procedures. In my perspective, a more interesting question is why business users go for opening an account with an EMI or with a challenger bank. Because we hear, yeah, like Darius mentioned, we hear a lot of buzz about FinTechs, but it's usually related to individual accounts. The first reason that I think encouraged this was solely online onboarding. So when you open the account with a Lithuanian EMI, for example, everything is done remotely. You don't have to go to a physical bank branch, the KYC, the compliance procedures. Everything is done solely remotely, and that allows onboarding clients not just locally, but also from other areas in Europe and as well globally. The second reason is that challenger banks and EMIs, they have slightly different target. And as Jekaterina and as Darius mentioned, after banks started de-risking, there was a lot of opportunities for FinTechs to grab some of their clients, mostly their high-risk clients, and also to grab some of their digital clients that don't have physical presence. So that could be, P2P payment platforms, other FinTechs, iGaming companies, crypto companies. Also, FinTechs, they usually have a very close relationship with their clients, because larger banks, they're not going to bother with creating a custom solution, creating a white label platform or something like that. Whereas we, as smaller market participants, if we see a business case, if we see it as a place of growth, we're always willing to talk to the client, provide them a white label payment solution or any other custom solution that they may require. Another reason why businesses start choosing payment accounts with EMIs, I think, has a lot to do with the sales structure. Since we don't have such many people and we don't have a history of working in the local and international markets, we often work with partners. So that could be corporate service providers, that could be company formation agents, lawyers, and especially those that are located in hubs where our target customers are located. So Estonia, Malta, and so on. And the obvious reason is that there is a lot of active marketing when it comes to payment fintechs for opening business accounts. I tried Googling just a simple query, open business account. So the first 4 and the only ads were encouraging you to open an account with a new market player. Now, these are the slides where I'm trying to see like where banks are stronger than us, and most of these obstacles were actually quite significant. So the first obvious obstacle is that the product portfolio of banks is just much larger. They have everything from financing to deposits, from investment products, mortgages, insurance, everything. Whereas if you take an ordinary EMI, that's mostly going to be just current accounts, payments. Some of them offer cards, but usually, you know, it stops here. And if you take even the largest challenger banks, none of them have a full range that could support, you know, a client that needs everything. Another very important reason is credit capabilities of banks. Banks are, of course, they have large loan portfolios, and they have very attractive lending rates, of course, because for themselves to finance their loans is much cheaper. So this is the lending rate that I found in the Bank of Lithuania's website, and essentially it's around 3% of an interest rate of bank loans to non-financial corporations that a company issues. And 3% is really low. It's the interest rate that the company, the end client, gets. Whereas if you take any fintech financing solutions, those rates are much higher. SME finance, when they were issuing bonds, they were issuing bonds with an 8% rate. So that means for themselves to finance their loans, it was much more expensive than for end bank client to get a loan. Also, we can't address at all large or clients that have physical presence because they need financing, they need credit lines, they need leasing, they need ordinary bank loans, and as you have seen, we're not attractive in there. Then they need cash, and this is of course where banks have a strong advantage, and they need a range of products. Another important reason is trust. Banks have been here for a long time, for hundreds of years, and EMIs have been here, you know, just for a short time. And when you mention it to a client, you know, EMI, first of all, you have to explain what it is, and second of all, you have to, you know, say that it's an actual company. It's licensed by the Bank of Lithuania, and banks, you know, they have all the trust mechanisms. They have a European deposit insurance scheme. Keeping money with EMIs, we're also required to safeguard all the funds by the Bank of Lithuania, either safeguard or insure them, but still building trust is quite complicated. And also client acquisition. As I've shown in one of the first slides, that there is a big number of EMIs and PIs in Europe, and they're all essentially doing a very similar thing. So getting a client is tricky. As you can see in the picture, there are currently around 400 EMIs in Europe. And so it's essentially almost a commodity product, providing payment accounts, and getting clients is really tricky. Yeah, finally, that banks are established, so they have good infrastructure in place. I mean everything, like from the payment systems, from the correspondent banks. They have long history. So I checked that one bank in Lithuania, this year they're celebrating 200 years since the establishment, whereas FinTechs were, you know, very fresh, celebrating 2 years or 3 years. And banks have a strong network of partners and customers. And switching for a customer, you know, if you have a strong relationship with a customer, is quite tricky. Unless there is a big obstacle to overcome, it's difficult to switch. Okay, and I come to the final slide. So where do we go from here? So FinTechs were actually becoming actual market participants with significant payment volumes. But they need to find and know their niche because there are so many EMIs, and if we can't find and target the right customer, a paying customer, we will not stay long in the business. We need to increase the product range and work on attracting target customers. Gaining trust is very important, and that can be done either by good past experience from other companies, or as some examples have shown, obtaining a banking license. And I think that a larger client movement will be between individual clients, because for them it's very easy to switch. You just open an account, download a new app, onboard by showing your face. It's very easy. And for corporate clients, I don't think actually there's going to be a lot of change. I think that large clients will stay with incumbent banks, and FinTechs will attract a different kind of customer. It's going to be an international and digital company with some SMEs being attracted. So basically, we're going to share the clientele. That's it. This is the end of the presentation, and we're going to meet during the panel.
Thank you. Thank you, Justina. Thank you very much. It's really very, very nice and balanced view of the market, and really interesting and thought-provoking. So I hope we have also time for discussion, and please remember to ask your questions in Slido. So just a small reminder, we are looking at them, and as we saw in the first part, some speakers even answer online. So let's keep that up. The next speaker is Monika Rimkūnaitė-Bložė, and Monika is the CEO of European Merchant Bank, and she will tell us how to go along the Merchants Road. Please, Monika.
Thank you. So, good morning or good day to everybody. I'm really happy and honored to be a part of this conference. Actually, I have quite a long experience working in the bank previously for almost 20 years in one of the largest banks that are represented here as well in this room, in SEB Bank. Later on, I was heading a fintech company, which was opened by 3 largest telco companies and meant to be a great success story. Actually, we had successful moments and periods of time, including the successful closure of the services 3 months ago, sale of shares to the other investors who will continue on that platform going forward. And here I am in brand new bank in town, as we say, or even maybe a new bank in European Union, since it's licensed by the Central Bank of Europe. So, actually, all the most important things have been said until now, so it's one more challenge of the conference, that being the third from the end, you risk to be repeating some thoughts. But actually my presentation has a wide range of elements coming from the Germanic mythology to the spaceships. And actually that's the way I would like to shortly present European Merchant Bank view into the global and local. Basically, well, local can be much more global than we tend to think from the first instance playground. So it is always important to start from the roots, and somehow I can't manage the slide, even being here physically. Okay, so what is hiding in the European Merchant Bank logo? Maybe you haven't even noticed, because it's very fresh player in the market, that we have 8-legged horse in our logo, which is coming actually from the Germanic methodology as a 8-legged horse, Sleipnir, who was traveling through the 9 worlds in this famous World Tree. And actually there are other ideas or myths coming out that this 8-legged horse was a mean of transportation for some shamans across the cosmos. I'm doing really bad with the slides. One friend actually asked me, so can you please describe what is the merchant of the 21st century? And actually the history is evolving and experiences are changing, but some basics remain the same. So actually we are not here to invent the new definition for what is merchant. It could be anybody or any business entrepreneur who would be tied with, who would be involved into the business, into the trade. And we used to have in the history different kinds of merchants. And today, probably you could imagine a merchant being quite different from the one in 16th or whatever century in the history, but definitely doing business through the digital channels, through the interfaces, acting probably globally, being maybe very local entrepreneur, and also actually in a need of both banking and fintech services. So how to deal with that. Again, parallel from the past. So most of the trades in the wide global network in the past was coming from via the different roads. One of the example could be a Silk Road. Back many centuries ago. And how are we doing about that today? So basically in the 21st century, where banks and fintechs meet to service the same merchants, so who could be both locally based or just trading locally and maybe at the same time globally, and heavily exposed by pandemic, which in fact showed and proved the importance of being globally connected via digital channels, and that we have to adjust to the new normal, as this even slogan in my slide is New World, where it's a combination of new and old in one. And both the financial institution market players, the fintechs and the banks, here are yet to find the balance, how to adjust and how to serve clients having very various needs. So in the global, again, combination of global and local surrounding, so where do we stand at as European Merchant Bank? So again, we are very fresh and new player in the market, got a license just at the end of 2018. And this year was the year when we started to work with our selected customer profiles. So we are making the first steps and learning from different experiences. And actually, we do not have any legacy, but we have a lot of experience to learn lessons and to adjust to the uncertain times and to find the opportunities between high demands coming from various segments of ordinary merchants, also fintech companies which are in a need of financial services, and also balancing with risk management competences and also technologies. So close cooperation with fintech platforms, that's something that we are investigating and trying to understand. And a lot of wise words have been said already today that basically not machine cannot solve the problem. It's a lot about the competence, but again, probably a combination of both. This is what needs to be employed in order to deal with in today's reality. So again, coming back to the cosmos that I was mentioning already in the beginning. Not probably the Sleipnirs itself, but how do European Merchant Bank envision the cosmos? Maybe the bank is the mothership as a banking platform for FinTechs to find the right way of cooperation. And probably we should be defining what components, what parts must be plugged into the mothership so that all business needs and also risk management needs would be addressed. I believe that combination of competence and the technology, that's the way to go. There's no the recipe invented yet. If there would be, probably I would not be standing here and trying to share the views, but this is how we are looking into the opportunity by doing the same de-risking in the way that Jekaterina was presenting, but also finding the opportunities and servicing different kind of FinTechs as well. And probably it not necessarily needs to be a rocket science all the time, because it's already old, well-known thing about cooperation and co-sharing. So why not co-banking? Why not to have some space in the mothership or elsewhere for cooperating and co-working for different traders and currency platforms, as an example. Stay always alert, not only in the control mechanisms, but also in creating different products and the same platforms and solutions for the future. That's about the journey which we are trying yet to find the roads which leads us to the goals that we have been raising to ourselves. And thank you for the attention.
Thank you, Monica. Thank you very much. Thank you for a really creative way of presenting, and you feel between the Star Wars and the Lord of the Rings, and it's really nice way of doing this. Now we fly again to the digital atmosphere, and I would like to present Alan Goodrich. Alan is Regional Sales Manager at ERI, the award-winning Olympic banking system. Alan has over 30 years of experience in financial services and technology, and he's worked for world's leading financial services institutions. He will tell us about the digital journey, Back to the Future.
Hello, good day everyone. I guess you can hear me. At ERI, we're very happy to be supporting this conference. And yeah, I'm sorry I can't be with you physically. Like some of the other virtual presenters, nearly made it. And I must thank the Lithuanian ministry for actually agreeing that they would waive my quarantine. But unfortunately, the same day they did that, Scandinavian Airways unfortunately cancelled my flight. So it looks like everything was transpiring against me to be with you. But I'm here virtually. And I'm going to continue maybe the theme a little bit of movies. We've had 50 Shades of Grey and maybe Lord of the Rings, etc. So now I'm taking you back to the future. If my slide will move. Yes. Okay. So yeah, I'm going to very briefly tell you a little bit about ERI, because I'm guessing that most of you do not know us. And then we'll get into the what of the digital journey, the why it needs to be made, and the when and how. So just going through the steps. So very quickly about ERI. We're a 30-year-old fintech, and we're quite unusual these days in our market that we're a single product company. So we focus on only one product, the Olympic banking system. And in fact, that system has grown completely organically over the 30 years. We have not acquired other companies, etc. It's all built by us. And of course, our mission is to help our clients, banks and financial services institutions, grow their business profitably, which at the moment is a pretty hard task. Even before COVID-19, the regulator was increasing the burden, and there's digital innovation. It was already difficult, and it's probably getting harder. So as I said, we're 30 years old, but we're still relatively small. So we have over 300 institutions in over 55 countries worldwide, which we manage with only about 400 staff, which I think is a testament to the stability of the banking platform that we provide. Our origins are private banking and wealth management. The company was founded in Switzerland and Luxembourg almost simultaneously, and driven by those banking markets. But today we're used by almost all types of banks, including central banks. In fact, the Central Bank of Luxembourg is a user of our system, and we have over 25% market share in Luxembourg. And given that we're relatively small compared to some of the competitors that you may have heard of, this slide also may come as a bit of a surprise to the audience, that actually when it comes to mid-tier institutions, we're the leader in Western Europe. And of course, we would like to now leverage that position and move into the Baltics and Nordic region as well. So that's a little bit about us and who ERI is. So now we're going to talk about the digital journey. So I'm going to start with quite a personal thing, really. Actually, it was back in 1981, my first experience of opening a bank account was, I'm showing my age here a little bit, was basically I went along to Barclays. And the reason for that was I happened to play cricket with, and my father did too, cricket and hockey with the local branch manager of Barclays. So he knew us very well, he knew the family very well, and Barclays had a very good brand reputation. But the whole idea of banking was that it was about trust. And I know that that's been mentioned already by the previous speaker, that trust is very important when it comes to banking. Not only did I trust the bank manager and the bank, but he also had trust in me. And actually, at the age of 15, he already gave me a credit card. I was issued with a Barclaycard credit card, and it was a real credit card, not one of these quasi-debit cards that you get today where you still have to clear the balance at the end of each month. This was a real credit card that had a real limit on it, and I could carry over that limit at the age of 15. And of course, that was because there was trust. He knew that even if I let him down somehow, then he could rely on my family to probably bail me out. And in fact, I stayed with Barclays for 30 years. And only left Barclays probably because I no longer had any ties at all with the UK. But now we're in 2020, and all that the banking industry is really talking about is digital transformation, and that means different things to different organizations. There are different benefits, business benefits, and returns on the investment of what that digital journey may mean for them. And I think that we're all recognizing too, it's not just about the technology. Technology is important, but there's the culture too, not only internally within the financial services institution, but also the culture of the client base is changing as well, which I'll come on to in some of the later slides. And that digital journey can be about the user and customer experience, optimizing, automating both front and back office processes, dematerializing processes, in fact, dematerializing everything. I mean, as we're in this conference today, we have a mixture of, if you like, I'm dematerialized because I'm attending virtually. And of course, we have the physical presence as well. And also support for new products and services that are are going to attract the next generation of customers, but at the same time also generate some revenue, which that is proving an interesting challenge for financial services institutions. And it's also interesting that generations are typically described as between 20 to 30 years, whether it's just from an age point of view, the fashion, but I think also from technology, we see that we sometimes go full circle. The buzzwords change, but actually the technology we're talking about has kind of gone full circle. We go from middleware orchestrating lots of different components, and then and then we go back to siloed systems, and then we break it down again into FinTechs with their little APIs and apps, all trying to link that together. And we seem to basically go round and round in these circles every 20 or so years, and we probably will continue to do that. It's maybe getting easier, but there's still, it's tricky. I mean, you build a system, you can think of Lego, which is obviously a Nordic thing. And, Lego bricks fit together very, very well if they're all made by Lego. But if you start to introduce a Lego lookalike from China, they look alike, but they don't necessarily fit quite so well together. And I think we see the same sometimes with technology, that things that are supposed to work together with this new concept of components and services don't necessarily always work that way. But the digital journey is critical. And, as I said, we're in a unique era of business challenges. The regulator is piling on the pressure. Productivity has to improve all the time. There's increased complexity. Clients are demanding more sophisticated services. And the financial services institutions have to find new sources of revenue with new products and service innovation. Transaction fees, the pressure on them has reduced them almost to nothing. Payment services have arguably flown the coop already. And interest income is not so easy to come by. I mean, in some places, you're talking about negative interest rates. And then, we heard today a lot about some of the kind of macroeconomic challenges of banking in the global playground, but there's also this huge shift in wealth, if you like, that's going to happen over the next 10 to 25 years that the banks and financial services companies also have to deal with. Not all of the research agrees, but on the low end, they're expecting something like 8 trillion to change hands over the next 10 years, and at the high end, maybe 60 trillion euros over the next 25 years. So this really means that anyone providing financial services has to really adapt their products and to deliver to this new digital market, this new digital generation. And, as I think also was mentioned earlier, they're not necessarily as loyal as previous generations. Research again has shown that over 28% of clients' children will discontinue the relationship with their parents' financial services provider. So how are we going to stop these customers from jumping into another pond? How are we going to attract or keep these clients within, like, the traditional conventional financial services companies and not let them disappear into the GAFAs and other neo banks or neo financial services institutions that are out there? And again, previous speaker, he talked about trust, and this is something I'll come on to as well. Clearly, there's a greater focus on digital channels, socially responsible investing, and social media. All of these things are coming much more into play, and clients, the new generation, are demanding much more digital interaction when it comes to delivery of those services. And this new generation, they're what we call the sandwich generation, because they're having to look after their older members of their family, and they're somehow sandwiched between them and also the younger generation, their own children. So they're having to think about life planning in terms of education, healthcare, restructuring maybe the existing debt that they have, or maybe the family has. There's a lot more to it in terms of financial services provision than there maybe was with previous generations, which creates opportunities, of course, for the providers. So, yeah, I mean, the quote from the movie, "Roads where we're going, we don't need roads." Well, I'm not sure we're quite there yet. Even the Teslas still needs a road. But one thing is clear, is that for financial services institutions and banks to stay relevant, they need trust. And you see it actually, I spent 7 years in Africa, and practically every bank has trust in their name. I mean, actually, it's quite ironic because they're probably the least trustworthy banks, some of them, but trust is key to why people use banks. It was safe custody of physical assets. Money was physical before, and securities, shared certificates, etc. It was physical safe custody. Now we're talking about digital safe custody, which may also become commoditized. It may just go into the distributed ledger. So the trust now has to move to being probably a trusted advisor. If you're going to use a financial service institution, you have to trust that they are going to give you the best advice. And actually the transaction processing and the custody is happening just digitally in the ether somewhere in the cloud. And how do you do that? Well, I mean, obviously our system, we like to think is one of the well-adapted systems to that. But it doesn't really, I'm getting time up from the green room, which is fine because this is my last slide. I mean, basically, you want to have vendors that you're looking at that are covering all of these areas, so that they're covering industry standards. They work with FinTechs because we can't exclude them. We want to work with them. That their technology is adapted to the latest ways of deploying it, whether it's in the cloud, that they're using latest technology, AI, understanding blockchain. All of these things are really important. And, as I think it was, and it may be interesting to Darius, going back to the trust thing, we work very closely actually with KPMG in Luxembourg, who actually are the ones who provide our system in the SaaS environment. Because in Luxembourg, we have a unique regulatory environment where actually if you provide the system through SaaS, you have to be regulated by the regulator. Anyway, that's my 10 minutes. That's a quick back to the future banking. And I hope you enjoyed it. Thank you.
Alan, thank you very much. Apologies for the time's up notices, but this is what we have to do, because a good event is judged by that it starts on time and that it finishes on time, because we all are busy and we have things to attend to. But before that, we will try to understand how to stay relevant in the social media bubble. And I don't think there's a better person to tell us than Liudas Šimkus, the head of marketing of SEB Lithuania. Liudas, please.
Good afternoon, everyone. Thanks for staying in the room and not leaving. As you understood from that's the last topic, I guess, of last presentation, at least of the day. So I won't be anymore speaking about AML and risks and regulatory. I will speak about the topic that I know most. It's communication. And just a few insights I wanted to share, how to be relevant, how to stay relevant for the banking industry. It's not a secret for us that banking is not the topic that people are mostly interested in. This is not the first thing that people are checking before they brush their teeth in the morning. And that's another challenge, how to stay relevant against the millennials and against the new generation that is coming. So how to survive for the banks and fintechs in the social media bubble? How to cope the new reality? And I guess a few things to understand the landscape is that today traditional media that we used to call is not a monopolist of the news. So the media as we used to know, the radios, the newspapers, they are not holding the monopoly of the news. And the landscape has changed since probably several years. And these are the examples that you see on the screen. These are the top media sources today. The tweets of Mr. Donald Trump are immediately creating the world's headlines in the morning. Then some politicians and opposition of some neighboring countries of ours are using mostly their social media channels to broadcast the news and to share the views and to engage the society. Looking at Lithuania, nevertheless, we know that, taking example of Mr. Andrius Tapinas, he was not only the guy who has gathered 40,000 people within a week's time to support Belarusia, but also during the COVID crisis, as you remember, he and the team has gathered almost 3 million euros in, I guess, 2 weeks' time to support our medical staff with the masks. So it's amazing, for such a small society and such a small country as Lithuania, what an impact today's influencers and social media is making, and what a shift it has done in the way that we have communicated, not only as a persons but also as a companies. So what is happening now, what is recently happened is that, for instance, YouTube has hired tons of so-called fact checkers. This was only the case, I remember 3 or 4 years ago, main portals in the Baltics have been fighting the fake news and have been hiring fact checkers, and this is same things are happening on social media. And same rules as in the traditional media apply. Also, it's a booming era of influencers, the Patreon financing, podcasts. I don't know if you have heard, but recently probably the most known world's podcast, Joe Rogan, has signed a deal with Spotify with over 100 million USD value. Meaning that from September, Joe Rogan can only be listened via Spotify channel. And again, trolls and elves. Trolls, we know who are them. Those are anonymous commentators on the media, and elves are the ones that are basically fighting the trolls and fighting the fake news. So this is reality that we live today, and that's amazing that it's so-called alone together. Living in the social media is like a feeling that you are, although you might be an introvert, but you are living very social life. At the same time, let's not be fooled that sometimes we are living in our own social media bubble, so to say. And then sometimes it happens that after election happens, you see some totally different landscape on the result that country has voted, because your social media bubble was probably speaking totally in a different way. So all of us are kind of living in this isolated bubbles, and sometimes we should be very cautious not to be fooled that this our information bubble does not necessarily represent the bubble of the society. And just a few facts from the Baltics, as you can see, what are the biggest social media channels. Facebook is definitely still the queen and the king. It has almost as much amount of active users as YouTube, and LinkedIn is definitely evolving. Please pay attention. Use LinkedIn for your company's profile as much as possible, because this is especially for the B2B communication. That's a top channel again for building your brand as an employer branding platform that really works well, and it's, as you see from numbers, quite rapidly evolving in the Baltics. And definitely Instagram, which which is mainly the platform for the youth. And if sometimes we say that is it too big or is this influencer marketing important or not, just a few facts, a few numbers, that some of the, let's say, Instagram influencers in Lithuania are already as big as some of the portals and so-called traditional media. So via influencing your brand via the influencers, of course, in a very careful manner and in a very selected manner, might give you a reach, as big reach as within the so-called regular media. At the same time, we should be very cautious, and you see, probably you saw a few of those examples. I just put, a few on the slide. One of them was one of the most Lithuania's famous DJ, very homophobic post on the Facebook. Another one is our famous politician once posted pretty unacceptable post, and both of them have exploded in the media basically next day and damaged the personal brands of these people. So we have, not only as a company, but also as an individuals, be very cautious and careful what we say, because it has all of these things are having coincidences. And when we speak about trolls, we sometimes think that these are sort of anonymous hackers somewhere in the internet, but they are very close to us, and they are closer than we expect. For example, this guy Vitaly, he just appeared to be a SEB employee and announced that on the internet, and we probably might have not even seen this post, because some of the people started to send us mails and asking, is this guy really working for your company, because he made some controversial posts on his media, and it appeared to be that this guy never even applied to SEB, but there is a conversation in the social media that he is basically one of us, as you can see. So also you have to be very, very careful about these people. Most of the time I try to basically explain what is happening, and hopefully you will carry some trends out, but I wanted also to show a few examples what we have done. I'm not saying that is absolute true or this is the way to go, but this has been the path that we have chosen as a bank, as a traditional so-called bank in SEB Lithuania. So when we have launched in 2013, basically we have clearly determined to ourselves what do we do there. So we do financial literacy tips, news and offers, relevant information, seasonal information, meaning that, for instance, when people are filling in their tax reports, we are helping them, but mainly we are there for customer support and issue resolution. This is the main purpose why we are on the social media, and today we are getting closer to 50,000 active followers. And the team, that is so-called SEB social media team, it consists of contact center dedicated people that are trained by marketing and communication. We have launched a robot chat last year, and our robots are getting smarter and smarter every day. Sometimes you are not even aware that you are chatting with a robot, but being very transparent, we are telling that you are talking currently with a machine. Then it's definitely marketing and communication and so-called crisis management group for very rare cases that we are receiving some comments or some criticism. Most of the cases, customers are complaining in a rightful manner. And that's becoming one of the main communication channels now for the bank. As you can see, I just got a few numbers from 2018. Basically, the number of messages that we have been contacting people on Facebook has tripled. So I think this year we will be somewhere on 12,000 answers per year, basically 1,000 per month. And we have this internal rule of answering during one day. Within the working day, we are resolving the issue over the phone, and then after that commenting that on our wall. And definitely the public comments and tags are top priority. And as you can see, few screenshots, public claiming is now a new normal. We get it almost every day. So is public appreciation. As you can see, people, if the conflicts are resolved or if claims are being answered, people are really appreciating and sending their notifications not only to the bank, but as you can see, in some of the cases to the people personally that have helped and that have resolved their issues. And of course, sometimes, as you can see, we are not able to change the perception, and that's fine. But in most of the cases, it pays off, and people are really giving positive feedback, and sometimes even reviewing and changing the value of our page. And we had another small challenge: how to be relevant for a millennial for the bank. Imagine that. Why should millennial follow bank or financial institution? So we had this dilemma, and we have entered to this experiment 2 years ago. And again, we have clearly answered to ourselves why we should be there, what we should do, and if not. Our main task was to build a financial literacy platform and to build a community of millennials. And the content is purely financial literacy. Nothing but financial literacy. And we said that there are no products there, no product push, no customer service. And at the same time, we should be very consistent with our brand. It should not be controversial, and it should not shock our older society or other customers. And what we have learned on the way that we spoke a bit about influencers. We have really carefully selected influencers to whom we are working with. Anders told today about corporate sustainability, and among our influencers, we have one very young 16-year-old lady who is living the values of sustainability, who is living this zero trash philosophy and zero waste philosophy and minimalistic philosophy of life. And Rasa, who was also one of our moderators, she was very close to millennials, and we have always strived that it's not the banker that is talking to the millennials, but it's the regular people. It's one of them. So in a nutshell, content has to be very relevant. We were talking about tips how to save the money for your transport, how to save the money for your food, how to prepare the lunchbox. What does that mean, creating your own lunchbox in a year's time? How much it costs for you to have 2 cups of coffee in the morning? How much does that end up in the end of the year? And try to be relevant, try to be simple, try to talk their own language. And it's not a bragging session here, but we received the award 2019 that was called the launch of our Instagram platform was called the Image Campaign of the Year. And summarizing my short speech today is just a few tips for you to carry and to bring. First is, as you saw in those screenshots before, social media buzz, you cannot ignore it. You should be very aware, and we are basically 1 minute away from the media attention. Avoid discussing competitors and fight trolls. Believe me, fighting trolls is not a good idea. Also speak like human, always be kind, and if you are tagged or if your employees are tagged, it would be very wise to answer immediately and to take measures. Very important note from our experience is we have never erased any comment or anything that was negative about the bank. We try to resolve it. Of course, unless it was against our communication policy or rules, or it was abusing. And as there is no rule book, for how to stay relevant in the social media, my main advice is try to be authentic, try to be empathetic, and try to speak with the customers. Every case is different, and try to be human as possible and as empathetic as possible. There are no silver bullets answering the claims. Every case is different. But deal with this with all seriousness, and definitely this will change the way we communicate. That's it. That's all I wanted to share with you today, and thank you for your attention.
Thank you very, very much. Please take your seat for the panel, and I would like also to invite again Darius and Monica and Justinas to join us here at the front. We're almost there. The organizers decided that we have 25 minutes for the panel. That's a wise decision, given that lunch is a very important part of the conference. The mics have been disinfected in the break, but of course, we have 2 for 3 people, so be careful. Now, we have had questions, a little bit less active after the coffee break than before, but I can see that this time Justinas and Darius were the most popular people to whom questions are addressed. And then I hope we do get this first question since March from audience also, from the live question. But let's start from Justinas, maybe, because I think it's a very, very interesting question. And as I said, your presentation was really thought-provoking. So the question is, nobody talks about cryptocurrencies. It's not entirely accurate because there was some discussion, but not too much. And about blockchain. Is this out of fashion?
That is an excellent question and really thought-provoking. So whoever asked this should be proud. It's a really good question. Maybe this wasn't mentioned so much because there was a comparison between FinTechs and banks, and since banks don't do anything related to that, it wasn't covered that much. But it's actually very relevant to us. A lot of our clients are from the crypto industry, and actually, although there is less buzz about it, but no matter from which perspective you look at, if you look from speculation, from trading perspective, the volumes of trading Bitcoin are the highest this year, even though there were big price changes during COVID. One day in March, the prices dropped 40–50%, and now they're back up. So there is a lot of things going on there. Yes, it was mentioned a little bit that users actually find it, nice if they can buy or sell cryptocurrencies on their app. So that adds to the stimulus for them to open an account. And from the business's perspective, also, there are several ways to look at that. So if you look from an ordinary e-commerce shop that wants to accept cryptocurrencies in their shop, that's actually very alive too. There are several Lithuanian companies providing it, so SpectraCoin, CoinGate, and CoinGate is probably the most known name, and they've been doing really fine with digital customers in that field by providing a gateway to accept cryptocurrencies and convert them to fiat currencies. And also in the global sphere, maybe it's not as loud as was Facebook's Libra, for example, but large financial corporations, JP Morgan, for example, they established their own stablecoin. Stablecoin essentially is a cryptocurrency that's backed one-to-one with a real-life asset. Usually it's $1. So they made this virtual dollar, and essentially their internal blockchain for settling payments between the different departments, their global departments, Asia, US, Latin America. So it's alive, and there are a lot of other corporations doing that. IBM is developing a lot of blockchain solutions for enterprises. Fidelity, one of the largest asset management companies in the world, if not the largest, they're developing custodian solution. So essentially, they're going to be the ones, securely storing cryptocurrencies, and that would allow serious players such as, wealth management fund, asset management funds to securely store them. And there are, wherever you look at, Goldman Sachs, they've invested in a stable coin as well. I think it's called Circle. So it's alive, maybe not as flashy as it used to before, but it's, it's very alive.
Thank you. Thank you for a really deep answer. Dario, maybe there was a question before the break, so I thought maybe we should bring it also here. The Lithuanian stimulus package and the Lithuanian government response to the COVID, and you spoke about this a little bit, but maybe you can give an evaluation and also comparing it to other countries, or what is it? I mean, how do you evaluate? Is it enough? Is it too much? Is it what is it?
Very interesting question. So I'm not a macroeconomist, so I'll answer it maybe in my own view in numbers, you know, when you look at the numbers. So I think it's safe to say. Actually, we had a good discussion today with a colleague here who gave the analogy that the economy was stopped by the government, and then the government was trying to find ways to run it, you know, rerun it again. So basically by pushing money there. So which is, I think, really what happened when you think about it. I think we have to understand that, all of the countries are doing it. So then in a situation where the countries where we export goods to, if they have huge stimulus packages, the competition for Lithuanian companies in those countries would be not fair. You know, if we don't stimulate our companies, we'll be at a disadvantage. I agree with Morten in the sense that we have a lot of reserves in terms of debt, but then how much debt is good or enough. When I was young, 20% of GDP, that was a lot. Nowadays, 60 seems to be the minimum. And then there are thoughts that, well, you can have 100% as long as you make your interest payments on your debt based on your GDP, you're surviving. So I'm a bit wary of where this is going to take us. So to sum up, I think the response was what it sort of had to be. You know, you can't do nothing, but we have to be wary, as I said in my presentation, of where it's going to take us.
Thank you. There's another question to you, Dario, so maybe you can keep the mic.
Okay.
The question is, now you talked about the moratorium and kicking the can. But on the other hand, how many clients have used it in Lithuania? Did they really kick the can down the road?
I think the statistics are that, or at least our government is saying that the program has been effective, and out of the 5 billion that were planned, 1 billion has been distributed. I also tend to think that most of the money went to small ticket items, as I say. So it's not that a few companies got a few 100 million. I think it was more or less the smaller companies that got a lion's share. So I would say it's been rather effective. Now the bigger companies are still waiting in line, and with the launch of the new Viva fund, if we call it, that's going to be another 500 million of larger ticket items. So I think overall quite a good part of the economy, and especially the part was affected most, got at least something or got a good part.
Thank you. Monica, there's a question to you. Again, I think it's provoked by your very creative presentation, so it's very visionary. What would be your formula for a successful new SME bank? What is most important for if somebody decided to create a new SME bank?
Well, our vision is beyond to become just the best SME bank.
No, it's for others. I mean, it's your advice if there's a person here, and apparently there is, because these questions don't come out of nowhere, who would think about an SME bank, what is the advice? That's, I think.
No, first of all, SME is highly underserviced customer segment in Lithuania. So many of us know that, and there are a lot of statistics and evidences around that. I think that the only one good formula is to start from the customer need perspective and to really focus into a certain area of business, probably to start with, understand the needs, ask what the customer needs, and then to build the products around and to arrange the organization around, rather than to start the other way around. And it's easier to say, but in fact, we haven't started that way either, even though we are focusing to SMEs. That's not the only one focus area for us. But I mean, by establishing the bank, you have a lot of requirements. And today we are observing being very much disbalanced organization in terms of how many people facing on a daily basis customers do we have, and how many we have in the risk department, AML, and elsewhere. So probably, well, I would not be too smart to start sharing those numbers, but you all know what I mean. So it's a hard, actually, task to find the best formula, but I think that everything starts from the customer need and from the focus. Because if it's all scattered, then it's difficult to be the best at something. Thank you. And there's a question to Ludas also, and that's you talked about the modern outlook that the bank is portraying in the social networks and using Instagram for the Generation Z and so on. So there's a question here. What are the risks of, is there a risk in being a modern bank? Maybe this is not really compatible with the trust as the image of a trusted partner. Your tips how to combine being trusted partner, so I guess this means being conservative and stable and the same all over the years, with this modern bank image and being ever changing and ever adapting.
I guess there is, how to say, for me it's very simple. The banks should innovate, and the banks should be, maybe they should not be ahead of the curve, and maybe this is something what we should learn and cooperate with incumbents and FinTechs. There are, banks can't probably be that fast, and we can compete with the speed, but there are some certain synergies. But I don't see the clash here. I don't think that being modern and being open is somewhere controversial. I think we had, if the question was specifically on this openness on the social media, of course it has some risks, and it has all those dialogues on the social media which are publicly seen. By the journalists, by the media, by some other people. So basically everything that you are talking is public. So we have number one rule is never discuss private issues on public. Basically we are solving the issues privately with the person, and then commenting them on the wall after the conflict or basically the issue is resolved. But main rule is to be as transparent as possible, because the society has changed and the habits have changed, and we just cannot live in our own bubble. We are part of this discussion already. If we are tagged on Facebook as a person or as a company, we are already participating in this discussion, and we cannot live in the trench like we used to some few years ago, only communicating one way during the press conference. This is not happening. And there are so many inspirational cases that companies are dealing on the social media and on the media with the people, and I say almost 100% of the cases when you resolve the conflict, the customer is happier, and then he becomes, rather from being the hater, he probably becomes the ambassador, most of the cases. And that's, this golden rule of NPS.
Thank you. Thank you. So now we need to have a question from the audience. I don't know if we have well, maybe I can institute a prize, actually. I don't know, Ira, do you have one more of these things you gave me in the morning? I mean, anyway, a very special mask branded with TGS Baltic. We give it to you either today or we send it to you later if we don't have a new one. We have one, yeah. So, who would like to ask a question? Okay, thank you. So, no, but you get the mask.
So a lot of your stories were B2C stories, I presume. What about B2B? What's the experience with that?
I think, yeah, it was a bit less on the B2B. We are mostly using LinkedIn for B2B purposes, mostly with the communication related to our innovation center, where also some of some of those partnership initiatives are already happening. But it could go faster. So we just kind of did it step by step. We said, customer care first of all, and we have intentionally launched the Instagram because we thought that we need to establish this dialogue with the millennials. But definitely LinkedIn is the place where the B2B conversations are happening. And I should say that from a communication perspective, this is the most efficient channel. Not necessarily cheapest, but the most efficient from B2B perspective.
And thank you. And by the way, the conversation about this conference is now going on in LinkedIn, if you haven't noticed. And Verslo Žinios has an article about this conference already, about what the minister said. So information is moving at an incredible speed. Anybody else for a mask? Yes. Yeah,
Another good question. I think it may, because there's probably more regulation if if a fintech moves from an EMI to a specialized bank. But the roots are in the fintech, in the EMI, so they already know how to handle the clients the fast way. So I actually don't think there would be too many changes. We have a procedures that a specialized bank has already, especially when it comes to compliance. So it's a theoretical question. I don't know what actually would happen if we convert to a specialized bank. Maybe Monica could tell more, but I don't see a lot of. There's going to be more regulatory changes, but in terms of how we react to clients, I don't think there would be so many different changes.
Thank you. If somebody wants to ask a question, please use the mic, because we have people participating on Zoom, the speakers. Well, I have a question. I don't know. Maybe it's going to be tricky or too deep. Well, you judge for yourself. But this conference is about the banking in the global playground. And we saw that the crowd here is very optimistic and very forward-looking and very ambitious. And as a country, Lithuania is very optimistic and forward-looking and ambitious. And we have lots of startups. We have investments from other countries, but also we have startups, and we have some unicorns, a unicorn, and then I think there's another in the pipeline. Not in banking and finance industry. Is there a unicorn coming in banking and finance industry? And where you think this would be a place or a business niche to look at? Who would like to visionize or say a visionary answer?
I can go, but I can go last.
Why don't you go first?
So in my presentation, when I talked about regulation effects, the need for fintechs to be bigger, I used the word mergers, not acquisitions, because the valuations of the fintechs, in my view, preclude them from buying each other out straight away. Where there would be a unicorn if somebody bought another, like a big unicorn, buying a small unicorn would make that a small unicorn. So my guess would be, rather than in the Baltic states or maybe in Lithuania, through some mergers, we could possibly see a unicorn that way. I think that should be the theme for the next few years, because I think you become a unicorn if you get funded, but funding is drying out a bit. So maybe that's one way to become a unicorn, just to be really cool.
Yes, thank you.
I think it has a lot of challenge for the bank or for the highly regulated fintech to become a unicorn in a way that to correspond the investors expectations, if that's kind of shareholder, for example, which for sure requires the return, right? Because the unicorn that we are speaking about, or some other good examples, I mean, if to look purely from the company financial situation perspective, then the numbers are usually in red, right? So, and then the banks, especially the banks, are so highly regulated and with huge requirements. So I think it's a great vision from the business perspective, but then what to do with all the mandatory and regulatory requirements at the end of the day, right? And there are great ideas. I think that one, just let's skip regulatory and financial requirements. There are great ideas. Lithuania is a very small country to develop the unicorn. So definitely we need to look into the global playground for that. Maybe Lithuania can be a starting point or a hub or the source where the competence pool is developed or the technologies are developed. And this is the way to contribute probably to some global unicorn.
Yeah, thank you. And by the way, Elon Musk, he was mentioned here also. I think he showed everyone that investors can wait for the return for a very, very long time and, and can still value a company very, very highly. Somebody else would like to pitch in on this? No? No.
Maybe just a short. I won't speculate on the unicorn, but I think the main challenge for traditional banks would be the speed of digitization and catching up with the world trends. I think this is how fast banks can reprioritize their digital agendas. At the same time, for FinTechs, I think the biggest challenge would be to find ways how to monetize their business, because we see many evolving, emerging businesses with huge amount of cards and clients, but I haven't heard so far stories on how they monetize. And although you say that Elon Musk can wait, and investors can wait a fortune, but we need to see some examples where monetization happens.
Yeah, of course. Thank you. Anyone else would like? This is the last chance now for a question from the audience. Yes, please. Please wait for the mic.
I really like the question on unicorns, and maybe a follow-up question here. So, if you think about unicorns, it seems like an obvious solution to attract, because we have this so active Bank of Lithuania looking for fintechs to be attracted. But on the other side, we kind of get potentially a large fintech coming in, and with the weight of all of the potential, insurance of the deposits, all of that. Like, sincerely, would the Lithuanian banking system vote for this as a good initiative, or it's a bad idea, in essence, increasing the risk for such a small country?
Do we want a unicorn in financial industry? That's a great question. So what do you think? Luder, do you want a unicorn? Would you open an account for a unicorn?
It's a question, I guess others are more competent to answer this question, but as a patriot, as a Lithuanian, definitely, the more unicorns in the country, the better.
So, but I think the question was excellent in the way that, yes, unicorn is great, and it brings fame and investment and jobs, but it's also risky. So I think, yes, please.
I do not see any fintechs becoming unicorns very soon, unless, like Darius mentioned, there's going to be a significant consolidation in the field, and it would still take a few years. But I think those companies that actually grow to the size, they can't be irresponsible. So they have to have a risk management in place. And if they become unicorns, I think Lithuania should be proud. I would be proud too. And I really hope that risk management would be in place, even though fintechs usually deal with either individual clients or higher risk corporate clients.
Thank you. Some other contributions on this one?
This is something I didn't want to say, but I will say, I guess. So I think we have to look at it from this perspective. What would this financial institution do? You know, because at the beginning, when the FinTechs started, we had, let's say, company here who does one thing very well, let's say payments, and here we have a bank, which was, as explained, does everything very well. So banks have valuations around 1 times book value. These guys have around 1,000 times card users value or something like that. And now they're moving, you know, so we had, you know, we liked Revolut because, wow, awesome payments, and everybody was happy. But now Revolut and the bigger ones are moving here. So as they move here on the sort of product, risk management, prudential requirements, they become bigger, but they move and they become banks with valuations of 1 times book value. That's all.
So it goes in circle. Thank you, Darius. Thank you all the panel. Please join me in thanking the panel for the discussion and for their presentations. And now also thank you very much for listening. And I think we heard today really a lot of things we would like to kind of come back to and remember and think about again. And we explored how the global playground in the banking and finance industry looks. And I think there's been really excellent insights. For me, the biggest takeaway is the enthusiasm. That was the first thing we started in the morning. So it's really, you made the day with your first vote. But on that note, there is one last thing that is separating us all from the lunch. Could you please scan this logo once again? The last time, I promise. And now there's a survey, and there are 2 questions. They're not, they're very straightforward. So question 1 is, on a scale of 10, how likely are you to share any takeaways from this event with your colleagues? And please be honest. We don't want, don't be polite, just tell us the truth. If it's 0, then it means 0. So insights from the conference with the colleagues. And number 2, will we see you next year? So these 2 questions. And let's take a couple of, a minute for everyone to answer, and then we show the result immediately. So full transparency. It's all anonymous, by the way, so you can be absolutely open. And if you have some more detailed comments, we also very much appreciate that. Every time we get some really good and helpful comments after the event, so we would really very, very much appreciate your opinions or suggestions. What could be done next year? What went well? What could be done better? Okay, so do we have a result? No. Is it so bad? Okay, so, wow. No, this is a really enthusiastic group of people. Thank you very much. I think the only thing I can say is a round of applause. So thank you. And yes, 75 to 20 maybe, and somebody said no, and thank you for being open. No, really, this is, and tell us why, and maybe we change something so you come. Okay, so thank you very much once again. Now, a very important part is a networking lunch, because we are here, we were missing live events for networking, so here we go. And thank you very much for listening and being such an active public. Thank you.